Yeah, the free week is winding down. It's been a great week, and hopefully we've learned a little bit and had a little bit of fun, and we've made some money. So let's get caught up here in the chat room. Florent, what's up, my friend? Good morning, Ria. My bestie, what's going on? Ivan, good morning. Lucian's, oh, we got Lucian in the house. Thanks, man. Thanks for being here. Daniel, what's going on? Russ, good morning, my friend. Darian, what's up, man? Marley's in the house. How are you doing? Yes. Man, it is so far just packed. People still piling in. What's up, Vincent? Let's give me just a few more seconds here. Yep, they're still flooding in the gate. All right. If you got any tickers for me, go ahead and throw them at me. Let's get them going for this morning's day trade. And we'll get them on the list. All right. Coming up here. Sweet. Let's get started. Laura's got some for CMG, Amazon, and INCG. I got Amazon on the list already. INCG, is that a typo? It's not pulling up. Lori, let me know. BWA. All right, cool. Got any more? Let's jump into the markets here. So we had some unemployment data come out. That's kind of caused things to pull back just a little bit. So we are now inside the range of yesterday when we were gapping up out of it. Big moves, lots of big moves. Today might be the day that does the thing we were looking for yesterday, right? Or we poke our head up above that resistance and then pull down. We might be doing the same thing where we poke our head up above the high of yesterday and then just hang out. It's been on quite the rampage. It does look more bullish now with yesterday's close for sure. I think yesterday was the time that it should have rolled down. Still can, but it's showing a lot more strength than weakness at the moment for the bulls. So yeah, inside candle, I'm expecting a little bit of bearishness today. Just resting, right? I don't think anything crazy is going to be going down, but I do think that we'll get a little bit of selling and some resting. EST, DQ, DHI, SH, SHLX. All right, cool. So that's the SPY for you. Just kind of chilling inside candle. Qs are still hanging out at the highs. They look relatively strong. I don't know if they've been pulling back at all during this thing. A little bit. Not too bad. Slowly walking down on the gap, hanging out right on the high of yesterday's candle. They look relatively good. Not too shabby. All right, let's get to your all list. Amazon gapping up. Amazon with some good candles. We've had a lot of pullbacks on these candles, hence the lower wick, so that's been nice, and a gap up just above the high. We do have an EMA coming into play here, which I think will act as some sort of resistance for us. And then earnings are coming up, I think, next week. So, oh, hey, look at Ethereum. Yep. Making moves, my friend. Making moves. Dumped and now trapped and starting to scream. We're getting close. Yeah, Darren, I agree, my friend. If people aren't slowly walking their way back into positions here on this whole dip, we've been buying on the whole dip down. You should be. All right. Um, CMG. CMG had a crazy day on earnings yesterday. Inside candle today, most likely going to rest. If it breaks out, I am not going long. It's too extended. So I would probably pass on a trade today. I think we'll rest. I think we'll get a lot of chop, right? Look really bullish and then go lower, and then look really bearish and go higher, and just chopping around inside, resting, and then see what tomorrow brings. So I don't think Chipotle is going to do a whole lot after you have a huge day. I mean, you had 11.5% day yesterday. Once that comes, you normally don't follow it up with another big day, normally. So we'll see what it does, but I'm probably not going to be trading this guy. I think we hang out, pop our head up over the next day or two, and then slowly start working our way back down to fill this gap. So that's what I think is going to happen. BWA. Again, just kind of an inside candle today. Day, what's up, my friend? Thanks for hanging out with us. Inside candle again into a resistance. Yeah, I don't really have an edge on this one either. It's not giving me any real new information from yesterday. We're slightly gapping up right into the 20 EMA. We probably keep bouncing in between these two guys, the 10 and the 20, for the next little bit. Nothing too crazy happening there. As always, you can trade these and you can make money on these. I just want to show you the way I think, get you into my brain just a little bit. So just because I'm like, I don't know, that doesn't mean you can't trade it or that it's not going to make money. I'm just letting you know, whenever you're day trading, you need to be pretty picky with what you're doing, right? I could make money on any one of these stocks, but I could also lose money on every single one of these stocks as well, right? If it's more about waiting for your setup. And for me, especially if I'm going to trade in the morning, I need people to be trapped. I need people to be stuck. And, I need this big old bull day to come in, and then the very next day gap down to here. And then all of these people that bought are immediately scared and trapped, and this thing's heading lower, right? That's the type of stuff that I'm looking for. So again, just because I said it doesn't mean it's not going to work or that you couldn't get a good setup on it. It's just an inside candle with a lot of resistance. And I think we just keep chopping because of how big of a move we made. So Visa is a no gapper, really. We filled the gap almost yesterday and then sold off really hard and then closed very weak. So it's not the greatest thing I've ever seen there. You popped up and then just no bulls came in for the rest of the day. That's normally what happens if you get a really good move in the morning and then no one buys it off the 10 or the 20. Tends to just fall asleep the rest of the day. So with that sentiment being said, it's probably going to do a lot of the same today. I'm leaning more bullish than bearish on it. So look for some sort of trap. If you wanted to really trade this thing, it is an inside candle, so you need to be buying it low. Don't buy it after a trend forms. That's too high. If you want to go bullish, you need to wait for some sort of trap and then a push higher. And then take your profits around the high of yesterday is how I would play that. Face to the book. Same thing as everything. Earnings are coming up here soon. So people are going to start taking their bets and hedges soon if they haven't already. We've made about almost a 4% move in a couple days. I think we're going to pop higher and then pull back, either to some of these EMAs or the high of 2 days ago, retest, and then see if it wants to get going from there. Rock, what's up, my friend? Hope you're doing well. So Facebook has a chance, but I'm not going to be a buyer up here. I'm going to wait for a pullback before I'm going to start looking for something long. Just a little bit extended. VST. Inside candle again, up into a resistance. Nothing really crazy happening here. It could go either way. Might be screaming out of here, might be just hanging out inside of this candle and just putting in traps. So remember, these inside candles, if you're inside the range of yesterday's candle, so right now we're opening up at 1850. The high of yesterday's candle was 1858. So that's an inside candle, which means it usually tends to trap. It doesn't tend to just, sometimes it does. Most of the time, you're not going to get just this awesome trend out of there. It'll just look really good and then really bearish and you just get this trap. So that they tend to get pretty tough to trade. DQ. All right. Dairy Queen, baby. I'm just messing. I know it's DACO energy or whatever, but man, Dairy Queen is just much, it's funner to think about, I guess. Maybe I'm just hungry. I don't know, but love me some ice cream. I just think about this every time I see this ticker. It's great. So one thing to notice, we were up 20% yesterday and we gapped up 15% today. So what do we expect this thing to do? If you bought, right, Rock, if you bought this thing yesterday and you were up 15% this morning into a resistance, what the heck would you do, man? If you were up $2,000 on this thing in like one night, like, woo, sell it, baby. Yeah, I think a lot of people are going to be selling this and taking some profits. Maybe not all their profits, potentially, but earnings are coming up. Everyone's like, this was my target anyways. Bye, Felicia. So if we wanted to trade this, we're going to be looking for a short. And what I want to see is a bull trap. I want to see some bulls get in and then something we can short off of that for them to pull down on. Okay. I like this one. So far, Dairy Queen is my favorite one on the day. So pull this one up, put it there. I have a reason to trade this. I have some sort of sentiment. The gap is telling me something. The gap is bringing emotions into play, and I can trade off of people's emotions because people are predictable. Does that mean we're going to win? Nope. But I do have an edge, and that's what we're looking for. For a bull move, then trap, bear. That's my plan. So if I don't get that plan, I'm not going to do it. Okay. DHI. DHI is an interesting gap and go. Oh, man. There are people trapped from yesterday. People went to the moon yesterday and then gapped back down. There's a difference between gapping outside the range and then gapping past a pivot point, past like a support. We are currently at a support right now. This could go lower. No doubt about it. There are people trapped, but generally, if I bought this thing somewhere in here, I would be a little bit concerned, but not out of my mind concerned, because what happens after a couple of candles in a row that are in the same color? We get a pullback and it pulls back to a support and then it S curves out, right? So I wouldn't be like, oh my gosh, this is the end of the world. It's not great, but I don't think this is all that bad. I could see short is the play. I'm not going to go long on this gap and go. Not going to happen. Not today. So I'm going to look short, but I think it's going to be a little bit tough of a trade. There's still so much support in front of you, and the sentiment is still very strongly bullish. That one's going to be a little bit hard, but doable. Tough. All right, this is a good gap. SHLX volume is barely enough. Let's see if it trades gappy on the 5-minute. Oh, no. I'm not liking what I see so far. So I already see a baby gap there. I see a baby gap there. I see a gap there. Gap there. Gap there. A gap there. Dang it. So this is just too spready for me to trade, especially as a group. But man, this is a good gap. This is a good gap. We've got people trapped, right? Pulls down, people buying off the 200, bounces really nice, gaps up, fades. Everyone's like, it's not the greatest fade, but that's okay. And then this morning waking up going, I'm out. I mean, people are going to be bailing on this thing. No doubt about it. We're even gapping down below the monthly 10. Yeah, it's a good gap, but I can't trade this. Let's paper trade this though. It's just too spready. All right. Too spready. If I could type. Too spready. I'm taking, I guess it should have 2 O's in it. Too spready, but bearish. So we're going to look bearish on this guy. It is someone tell me what type of gap this is. Red candle gapping down. Retest gap. That's right. So we're going to let this thing retest. We're going to wait for some sort of bull move to come in. It might go lower first and then the bull move comes in. Or the bull move might come in right at the gate. But either one, we're going to wait for a bull move, find our entry and go lower. And this is going to be a paper trade. I'm not going to trade this for real, but it'd be fun to at least get an idea of what's happening. It's just too spready for me. The volume is just a little bit too light. And my plan says I can't do it. So Sava, same thing. I think you might trap. If this thing goes bullish, look for a short. It's too extended. There's 2 retest gaps in a row there and a huge day yesterday on volume, which means tons of people took their profits and tons of people bought. We might even have some shorts thrown in there too. So did it poke its head above it in the pre-market already? It did. Did we make it above it? We did. They had all-time highs in the pre-market and we sold off. That might already be the trap. So maybe we just kind of fizzle out today on this one. So that would be my game plan on that one. It's just to look to fade it lower. And Crocs. Is this a shoemaking company? Yeah. All right. Man, we're up 10%. Earnings apparently are smoking it. Crocs are back in style, baby. And people are ashamedly wearing them. Feels like every time someone wears Crocs, they have to like explain themselves. It's pretty funny. That's good stuff. What do I mean by retest gaps? So you have 2 types of gaps. Don, we have some free videos on YouTube. By the way, like 95% of our education is free. Don't pay for stock market education for the basic stuff. If you want the advanced stuff and master courses, great. But to learn the basics, what a candle is, how to trade, how to look for sentiment, all these things, how to interpret volume, it's on our YouTube channel for free. Other companies hate us because they like to charge you $3,000 for the basic package of how to learn the stock market. It's all for free. We have it all posted on our YouTube. We have over 1,000 videos on our YouTube channel. Check it out. There's a free PDF about gaps on your RLT dashboard. Oh, sweet. Check that out. I will answer your question though. But yeah, there's a ton of information out there. If you want to study up more after the free week, hit it up. So a retest gap is a gap so if we have a bull candle, which means we're bullish, right? The bulls were strong. And then we gap up the direction that the previous day's candle was, that is a retest gap. Why is that a retest gap? Because people usually take their profits. So if you bought something and immediately were up big on it the next day, you would most likely either get out of it or take something off. And that causes the stock to go down a little bit until it gets to a buying spot and then it goes, right? Or if it runs, so if we gap up and then it runs out the gate, people will then take their profits from the previous day or maybe even previous weeks. And then it will pull back down to support and then go. So no matter what, we're waiting for the pullback. We're waiting for the retest gap. So it could also be bearish, right? If we had a bear candle, and that gap's down, we have shorts that got in yesterday that are profitable, and they'll probably take their profits. In order for a short to get out, they have to buy it to get out, which causes the stock to go higher. So there's your retest gap. You're going to wait for a retest gap to retest and then get in. You're not just going to jump in even if it floods out the gate, right? If it screams out the gate, you're not buying. You're waiting for the profit taking, and then you get in. And just for all the people new to RLT, they do free classes on your dashboard. They are amazing. Yeah. It is super structured, and there are tests at the end of each section to make sure you understand. And if you don't understand the test or you can't pass the test, just reach out to us. Let's help you through it. Invest in yourself, right? I know a few people are like, the tests are not hard, but a few people struggle with them, and that's okay. Go back and watch it. The answers are all right there in the video. It's not like it's you fail, you can never become a trader. No, it's just to make sure that you understand what's going on, because it's really important that you do. Some people might read something and be like, oh, well, a retest gap is this. And it's like, no, that's not a retest gap. So the quiz just makes sure that you have a solid foundation of understanding. It's not like we're testing you to see if you're worthy. It's not that at all. We just want to make sure that you're understanding what we're teaching. Should we watch it like I did? Did the intermediate class twice? Yeah. Guys, it took me 7 months to get a hang of the markets. It's not like it's going to be, let me just take this 3-hour course and I'm going to start making a whole bunch of money, right? It takes time, slowly but surely, understanding how the markets are working. Once you understand how the markets work, you can apply any strategy to it. So today, getting back on this gap, how would you feel if you bought anywhere? I mean, we could even go a bigger perspective. Anyone that's ever bought this stock has something in common right now. What is it? They're pumped. Yes, everyone is waking up to the same emotion today. So if everyone that's ever bought this stock is going cha-ching, 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 you think a few people might sell their position? Do you think a few people might take some profits? I think so. So again, reading the charts, put yourself in their shoes. What would you do if you've been holding this thing since December and you're massively profitable and you're waiting for it to break this resistance to take your profits at all-time highs, and then you get that gap up, a 12% almost gap up? Take it. So we're going to look to fade this thing. So again, I'm going to wait for some bulls to come in, the noobs that are like, this thing's going to the moon, and don't realize that they're fighting against everyone that's ever owned this stock taking profits, right? So the problem is where to set up your entry and stop for a fade back down. Yeah, it's tough. That's why I give it 30 minutes or so. Let it build some support resistance to give me something to trade against. A lot of the times, it doesn't give you that time. A lot of times, we just sink right from the get-go and you miss it, right? That's why I want some bull candles to come in. Buy the rumor, sell the noobs. That honestly, that is pretty true, though. That's why a lot of things sell off. That's pretty funny. Darren says Crocs are so ugly, man. Dude, this is the year to be ugly. What, 90s are it right now. 90s are it. So for all your aunts that never left the 90s, they are now officially back in style. Woo! And Crocs are killing it. That's so comfy. I don't mind I don't own any Crocs, but I don't mind Crocs for like yard work. That's pretty much what I'll do it for. They're comfy. Oh, there you go. Hospital use. I'm about to jump me on that Crocs bandwagon, though. So if we look at this pre-market, we do have levels to trade off of this. All right, or we bounced off of that. We rejected off of that. Okay, so I've got me some levels to trade off of. This is the high of the previous candle. Do I think we're going to fill that gap today? Most likely not. Could, but most likely not. I'm going to look for a fade. Fade means we're trading in the opposite direction of the gap usually, or the big move. Okay, so if the stock had a big bullish day and we want to fade it, we're going to go short. If the stock had a big bear day and it's going way down, we're fading it, we're going to go long. We're going against the big move. Oh, come on, keyboard. Plug that thing in. Battery must be dying. Keep skipping out on stuff. All right. Yep. So we're going to hopefully wait for some sort of bullish move up here and then short the breakdown of it. That's the game plan. So we're going to wait about 15 minutes or so. 15 to 30 minutes is what I like to look for on these things. This is a retest gap. People should be taking their profits. I'm just going to see if noobs will come in first and try to push this thing higher, because new traders they're like, man, if something's up big, that's when it goes on their radar. When something's up big, it should come off your radar. If something's up more than 5%, it's coming off. Don't put it on. That's the problem. They look at stocks like GameStop that are up like 40%, and they're like, oh my gosh, we're gapping up 40%. And then it goes onto their list to trade. No. Off your list. Unless you have a specific plan like this, right, of what we're doing. I'm not going bullish on this thing. It could go to the moon. We might go up another 55,000% today. I'm not participating in that. Why? Because I know how the markets work. And I know that you might hit one or two of those trades, but the other 300 will crush you. You're not going to be profitable in the long run doing that. Chasing the big move. The big move's already happened, and that's what people need to get used to. Market opens here in just a few seconds. People got to get used to. The big move has already happened. You've missed it. It's already done. It's called chasing. It's called FOMO. Why the heck? If you didn't want to buy it, down here yesterday, what makes people want to buy it up here today? 12% higher. Why? Because now they see the big bull move. Well, now it's going bullish. No, it was people. You've already been bullish on this thing for a long time. We've been in a bull trend for a hot minute. I mean, look at this bull trend. It's not like it hasn't been bearish before. Look how big of a gap this thing is. Wow, insane. Russ says, I got stopped out of Crocs on Tuesday. It's why I'm here. Well, that is what happens sometimes, right? And just so you know, if you want to day trade, you've got to get really good at losing. You've got to get really good at losing, my friends, because you are going to lose all the time. If you lose, does not mean you did something wrong. Maybe you did. Don't feel like, man, I lost. I don't even know what the heck I'm doing. I suck at the markets. Man, you guys will watch me lose all the time. You're going to have probably less than a 50% win rate if you're day trading, and that's good. That's what good traders have. They're around a 50%. So get used to losing. And then Dairy Queen. I'm going to put both these little guys here. DQ. Yeah, DQ's already sinking. That's already sinking. Someone's saying Netflix possibly bearish. We'll see. Netflix still looks pretty good to me. I would love for the low of yesterday to hold. I think it's been pretty beat up again, right? Things that make big moves tend not to continue in that big move direction for a little bit, especially back into a strong support on a bullish stock. They tend to get bought up. So the fade's already happening on all of these. So they're not listening to what I wanted them to do. We go back to a 5 minute here. it just fell right out the gate. I wanted at least some bulls to come in for a little bit to give me a level to trade off of. Did not play out. Crocs sinking. And again, why are we thinking this? Why are we not like, hey, let's go bullish? This thing's going to go bullish, right? Because we walked you through it. People will take their profits. You're competing. You are competing with every person that's ever bought this stock in the history of this stock. Everyone has the same thing in common since 2006. Everyone is massively profitable today. You're going to get some profits taken. People are going to lock in some wins, right? So one thing's for certain too, we just talked about this is a bouncing spot that happened in the pre-market. We just blew through it. So what happens on this massively big bear candle? Yeah, people are now really starting to take their profits. They wanted to see if this would hold. I think this is going to be a trap. It's too big of a candle. I think we bounce back up, maybe hang out, and then we can get some sort of short there and see if we can roll back down, which I think we will. So let's see what this thing has in store. I think this is going to trap. There we go. So there's your trap. So all the bears that just got in down here, where's your risk reward at? Do you really want this to be your 1R play and then get in after that big of a move down? So now bears are getting squeezed. Good. This is what we want. Now we just need it for the next 15 minutes or so to consolidate. Let the bulls think now we're going bullish, and then you're going to trap them out. Okay. Crocs is listening. Crocs is doing what we want it to do. We're going to keep our eye on that. DACO Energy, whatever the heck this thing is. DAQO. I already filled the gap. This one sunk straight down, pretty much filled the gap almost. It's not quite there yet, but this one's coming off the list. That would be my profit target right up into here, and we're almost there right now. So this one's already filled the gap. It's already done, already faded without us, but Crocs is doing what we want. Lot of profits being taken. Driving this thing lower. And then all the shorts playing the breakdown. What we talked about, this support on the pre-market. They took the breakdown of that. The problem is, people, in one candle, we just moved down almost 4%. Who is shorting this after almost a 4% move down? Noobs. Yeah. And guess what? They're going to get stopped out. They probably already were. When that hammer came in, they're like, oh my gosh, and they're going to freak out and they're going to put their stop there. So the next question you got to ask yourself is, what risk reward do I want? Where does your stop have to go? My stop right now has to go above this. Has to. So if my stop has to go above that, that's the only place where the bears are wrong. If we got up above that, that would not be good for the bears. So if you were in right now, your stop would have to go there. That's the only place that makes sense, which means your entry's here, which means your 1R is the entire gap fill. The risk reward on that is absolute garbage. Absolute garbage. Yes. Okay, so our plan now that we're asking this thing to do is we want some consolidation with some bullish candles. Hang out in this range. This is what we want. So that now we can short it with our stop here, and we can get 1R to here. I won't take it unless I can get 1R to here, and then 2R, maybe even 3R down where everyone else was hoping they could get their 1R target. So let this thing consolidate another 10 minutes or so, and we'll jump all over it. Jump all over it. Yeah, looks good. Peloton hanging out and just sinking. Again, all of these with big moves. I thought this would happen yesterday. We're most likely, Peloton's most likely working back to 119, and then we'll bounce. Pinduo. Ooh, that's a good little retest gap today. We did gap up. We keep an eye on that one. How's AMD doing? Still going. Wow. Wow, wow, wow. Strong. at some point, we're going to have to start pulling back here, stock market. Tesla inside candle. So let's see if it's trapped anyone yet. Not yet. We just screamed out the gate. I would have expected Tesla to do something like this. Down and then a push higher. We did not. So maybe this is the trap. We'll see. Zoom. Wow, Zoom's putting in really good moves. The daily chart, I think we're done on a daily move. This area, 367.65, I think, is going to be pretty much it for Zoom today. Maybe this 10 EMA might be as well, but it's a gap and go, right? What is this? A bear candle gapping up. I wish I would have saw that gap. That is a good gap. That is a good gap. So did it give us a bear 1 minute candle? Nope, it did not. First candle was bullish, so I would not have taken this trade no matter what, even if I would have saw it. Yeah, the trio. Yeah. Look at all these lower wicks off of the 200 on a daily. Strong. As I was saying, any break above that is, and that's looking good. That is looking good. Pulled back to the monthly EMA. Trying to S-curve. Zoom will be up at 520 in probably the next 4 or 5 months, it looks like. And it missed my entry by a few bucks. That sucks. By a few bucks, doesn't that suck? Dang. All right, well, I gave it a shot on that one. Snow. Just chilling. I think I'm all out of snow. Am I all out of snow? Nope, I still have a little bit more of a position on there. That's right. Okay. Keep that on there. All right. Chipotle possibly could be a fade back down after that big of a move yesterday. It's an inside candle. It's going to be tough to trade, honestly. This thing is going to just be very trappy, so just play the trap. Facebook pulled back. This is what we needed Facebook to do. That's not much of a pullback, but it did pull back and trying to go. That's what we would have waited on. DHI. Hanging out. And there's just a lot of support here on this one for this to have to move. We basically opened up, went down, bounced, and we're just kind of chopping. Lots of support in the way. And kind of mixed sentiment. This is trapping some people. And I think it did gap down a little bit lower than before, didn't it? But this was a good short. And this is doing exactly what I wanted to do. It's just too spready. So we asked for it to put in a bull move. Remember the retest gap. So a gap down, bears take their profits by buying it, which causes the price to go higher. So the bears are taking their profits, and it's going to go up to a point where more shorts are ready to get in and then push it lower most likely. So this is what's happening. All right, bears are up here. This could be the short spot. What did we bounce off of all pre-market? The 10. So let's see if this trend holds. See if we short back down into there. I love this inside candle right here. This high wave inside candle, this red one. Really nice. It's too spready. Remember, this is just our paper trade. So that's 1R there. I prefer my 1R to be at the first pivot. Maybe that's just a little bit too wide. Not quite there yet. So what about shorting off of that EMA? Pretty much where it's at right now. Putting my stop up there. Does that get me a 1R? It does. So we'd be filled on that right now. Again, don't really know if that's where I want my stop. Let's see here. We've got, yeah, that's good. I've got a support level right there. That's a good setup right here. That's what I'm looking to do. Possibly short that right there. We'd be filled. Target one's at the low of that. Again, will it work? Who knows? I can't control that, but this is a good setup. Salva getting dumped on. How are the markets? Markets put in a good bear trap. Interesting. Bears, I think people are pretty excited to jump on the bear bandwagon right now. It needs to pull back, but it just is right now trapping them and then probably roll over later today. Qs to the moon, man. I mean, the Qs have actually had a real pullback, unlike the SPY, right? The Qs did this, pulled all the way back like, 13% or so, I think. SPY has not. SPY's pulled back like maybe 1% each time. All right, thoughts on MSFT. Microsoft is a retest gap into all-time highs right before earnings. Let's see here. Hold on 1 second. This is profit-taking zone, right? This is not the buying zone. This is where people take profits. Everyone that's ever bought this thing they all have something in common, right? They're getting ready to sell that thing. So profits are being taken. Have we retested or just gone straight up? Yeah, I would wait. If you wanted to go bullish, I would not, based on the daily chart. It's too high. If you really wanted to go bullish, you need to wait for more of a pullback, at least 2 or 3 bear candles, not in a row, but you want some actual selling to come in and then look for your entry to go more bullish. I don't know if that's the right play today. Maybe it is, but the RSI is telling us let's wait for some sort of pullback. Not yet. All right, wait. I'm not necessarily going to be shorting this either. It is a good gap into all-time highs. You could. If the markets start to roll, a lot of these are going to be heading down. Tesla's still chilling. Apple, it's a good move. This is a very nice candle on Apple. This little high wave inside candle. Inside candles are resting candles, right? So whichever direction you break out of those is usually a good continuation. So Apple could continue. All right, let's jump back to Crocs real quick. Crocs. I need to get myself a good entry. So remember, we asked for some consolidation. I need a little bit more, maybe another two more candles coming in without this thing falling off. I mean, we could do something where short of a breakdown of that bull candle with my stop up there. Stop has to go up here now because that's how high we got. And where does that leave me? It does not give me a 1-to-1 to that, so it doesn't work. I need something tighter. We could be really aggressive and just short the new high. That could be cool. It's very aggressive because I don't have a lot to go off of. It already looks like it's weak. Maybe that's the trap already right there. Dang it. Yeah, it looks weak. We might be missing this thing. That's okay. Just not giving us a setup that we need. I don't want this to go lower yet. I need it to just hang out. Give me a better risk reward because this doesn't work. I'm going to keep on waiting. Peloton sinking. Pinduo pulling back some. AMD, no crazy volume up there, which is nice. That's a good pullback on AMD, but this is also a pretty decent resistance zone that it's already hit. And you're working on how many bull candles in a row? 1, 2, 3, working on 4 bull candles in a row. Earnings coming up. Yeah, there is. Good chance that thing fades down. Crux has a big bid-ask spread. Yes, I look more at how do the candles look, right? So this thing actually does gap quite a bit. Today should have a lot of volume on it, right? The average volume on this thing is, go away, little pen, go away. The average volume on this is 907,000. And we're already at 1.4. So this today, just today, I think will trade just fine. Normally it is true, it's too thin to trade. So I'm looking more at how are the candles? Am I getting a lot of gaps? Previously, yes, I have a lot of gaps. But because of this massive move, we're getting tons of volume, which makes it tradable. DQ is still getting wrecked. What a great short. It just, we needed a bull move. We needed that bull move. And it looks like Crocs is already going to leave without us anyways. This is not super strong. You can tell it wants to go south so bad. It wants to go south so bad. I just can't get in it. Dang it. It's going to leave without us. It's just too wide. There is no risk reward. I mean, too many people are going to be like, let's just short the breakdown here with their stop up there. And then I'll just go ahead and get out right here. Well, you're only making 0.4 Rs. If you have a 45% win rate, let's just say up in, flip a coin. If I make $3 on heads and I lose $5 on tails, will I be profitable? No, I'm not going to be profitable in the long run. This doesn't work. But yet too many new traders get sucked into this. They get sucked into, well, I know my 1R is like all the way down on the whole gap fill, more than the gap fill. The gap fill is right here at 120. That's my 1R. But I'll just go ahead and take my profits right here in 0.39, 0.4. It doesn't work in the long run. The math doesn't add up. And that's why you don't want to just, whenever you're profitable, you don't want to just be like, I'm up $100, take it. Because if you're risking $200 for that trade, and you keep taking 0.5 R wins, you better have more than a 60% win rate or you're not going to make money. Right? This is just too big of a range. It's not tight enough. Maybe later on, but later on also might bring in some more spread, which we're not really interested in. Okay, let's see. So really appreciate your solid teaching style. Oh, thank you. Thanks for sharing your thinking process and the rules nuggets you've learned. Yeah, now those nuggets are yours, man. So, my friend, you now have those to help you out. Show you the process. That's all I want to do. I just want to show you how the markets work and show you the math behind being profitable. It's not about I made $50, so I just get out. Right? Too many people fall into that trap. Well, if I just get out as soon as I make $50, then I'll just get out. Could it work? Yes. If you can get the math to figure out, then yes, it'll work. But it's hard because you're asking yourself to be right most of the time to do that trade, to be successful. If you're going to take it $50, but yet you're risking $200 or $300 to get that $50 really quick, one loss is going to erase how many wins? So you better be really, really high. You need to have like a 7-to-1 win rate, like 7. You need to win on 7 to lose for every 1 you lose, or else you're screwed. Right? So just let the trade work. It's not about just, I'm going to take $100 because I'm up $100. You need to take some money at 1R to take the risk off the table and then hit 2 Rs on the trade so that you can actually become profitable. because you're going to be losing more than you win the amount of times. So you need to win more amount of money than you're losing. All about the math, my friends. SPY looks like, ooh, here comes a short. That is a good setup on the SPY. Same story. Everything's too wide. It's just too big of a risk reward. So I need some sort of consolidation to be able to get something tighter. But we've been waiting on this. This is what I thought yesterday would have happened. I thought yesterday we were going to pop up into new highs and then fade. And we did not fade at all. We popped up and then just kept going. This is not super strong. You don't want that bull candle taken out, but yet until we take this out, the bull move's not quite over with yet. I don't think we have. We're close. How are the Qs doing? Qs are holding great. But look at this volume. Where did that volume occur? Into the new high for the day, which I don't think we're at all-time highs yet. Maybe we are. And then what did we do right after this volume? We pushed back. So far, that's not good. We'll see. If we start to bounce and take it out, it doesn't matter. That would be strong. It's not so much where the volume's at. The volume's at a new I don't want to say all-time high, new high for the day. And it's a lot. What the heck is that volume? What is that? What could this volume be? Profit taking? Heck yeah. Yeah, I think so. I think this is a lot of profit taking. I think there's a lot of bulls, right, that were in this that were like, I should have taken profits here, and then it starts to fall and they're freaking out. And they're like, if we could just get back up to here, I'll get out. Right? How many of us think that way? A lot of us, right? Most people think that way. Most people aren't patient enough to do it. They freak out and get out down here. People that know how the markets work realize that this was a big move down. Let's wait and see what it does. And sure enough, it started to bounce. Take your profits and see if it rolls back down. I still think the Qs are stronger than the SPY, especially with earnings coming up on tech next week. It's looking pretty strong out there. So it was definitely some profit taking. Definitely. What else could it have been? Do we have some sort of resistance here? We have a resistance right there. Could we maybe have broken out? Ooh. How many noobs right now are buying the breakout of those daily candles previously over there? A lot. So you're getting a lot of those guys. What else is going on? Potentially some shorts getting in. Yeah, potentially some shorts getting in. So all of those things combined bring in that kind of volume. It's twice the size of the opening volume almost. That's pretty intense. So again, we're going to want to see what happens afterwards. And so far, it's 2 bear candles afterwards. This might be bleeding off for the day. Time will tell, but at the moment, not looking good. I'm not going long right now. No way am I going long. Once that volume comes in on a new high after this many bull candles in a row, I'm not trying to buy the dip. Could the dip work? Yeah, don't buy it. Not yet. Not yet. Wait. That's weak. So remember, we said we're really not out of this little bullish strength unless we take that out. We did. And did we trap? Yeah, we did. But still, the fact that the bulls couldn't hold this pivot, that's not super strong. So I want to keep an eye on SPY for a short. Yes, Donna, I can take it out, look at Apple real quick. Let me possibly set this trade up real fast. I don't even know if I'll have time to set this thing up, but I got a 1R there. I would love for this to be an inside candle next. That just means pressure's building, right? Bulls and bears are not winning. This is my 2R right here. Okay, let's take a look on a daily and see what this looks like. It's a good setup. I like it. Back around that month, the daily 10 EMA. We're really extended. This could be some sort of trap. That's why I like this entry. If we got in below, actually I need to raise this up some too. If we got in below that breakdown, that would officially not be a trap. Looks like I might be getting my inside candle. So 2 minutes left. May have just jinxed it. 433.92 by 434.63. That is a stop limit bear move, bear trade. Let's go down another penny on that guy. And then my stop somewhere there. Well, give this just 2 seconds here. See if I like it. I would probably prefer my stop to be up above the high of the day. But my whole thinking, my whole analysis of getting in on this is the fact that I know this tried to trap. If we take this out, it's no longer a trap. And so we should not get back up above this. If we took this out, it should go lower, right? That's why I'm able to put my stop there, because I would be wrong. If we got triggered in and then got back up above this, I wouldn't want to be in the trade. So that's where my stop's going to go. And that gives me the risk reward that I need. But my stop is still in a place where I'd be wrong. And that's the most important thing. Don't just put your stop. Don't put your stop here just because it has a better risk reward. Are you wrong there? Not really. The whole reason I'm getting in is off of this high wave candle that's tried to trap. Because a trapping candle should bounce right away. Remember, this is going to be I haven't put this in yet, but this is going to be a stop limit. If you put a limit order down here, you get filled right away. Has to be a stop limit. You're telling your broker, I don't want to get filled until it gets below 433.91. It looks like I'm going to get my inside candle too on this. I like it. It does match up. I would prefer my 1R target be a little bit higher. Let's see. Maybe it is 433.19. There we go. It is. Because I raised my entry up just a little bit. My entry was a little bit too low on that. Okay. If we break out of that stop, then it wouldn't matter. I would not even set this trade up. I might need to raise my stop up some. It's pretty close. No, never mind. You see how many stops got triggered on that? You see the quick boom. So this, I can't do this setup anymore. I have to wait for a different setup. At the moment, this does look like a bear trap, because a bear trap should start pushing bullish. That's why I wanted to set a short up below it. All right, we'll come back to this. Let's just keep waiting. Take a look at Apple. Inside candle, does it need to be the body and wicks, or just the body? The body and wicks, the whole candle, the open and close of that candle. Apple to the moon. Holy crap, my friends. This is strong. I mean, this is all the rest that needs. If you put in an inside candle like that after a good move up, that's all the rest it needs. It can keep going now. You don't necessarily need to pull back if you put in a resting candle like that. It's better if it does pull back. It's stronger in the long run, but. And yeah, it's a gap and go. Yeah, it's a good cap. It wasn't outside the range of yesterday's, right? We opened up inside that. So that's why it wasn't on my scanner. I need it outside the range of the previous day. But it is a gap and go inside candle, and it looks to be pretty good. The one thing to pay attention to today, though, is that is the high of yesterday, and that's where we're at right now. Are we getting volume at that line? Not really, kind of, not really. This is probably going to go higher. If we showed up and had volume like the Qs had volume at this line here, then yeah, that would be probably like, yeah, it's probably going to come back. But we did get a little bit of an increase. I think we'll probably roll down and see if we keep going from there. Huh. Yeah, Donna, this, especially this right here, this trap. Man, that's so good. Take out the low, just like the SPY just did. Take out the low and then scream up. And then you have, oh, that's almost an inside candle, but it broke out the high. If you had an inside there, maybe that's your entry. So where are people's targets at? You know that's a resistance there. That has to be your 1 hour target. So if you bought the breakout there with your stop here, there's no way. No way that's your target. 1 hour is up here. That's a terrible risk reward. So we can't do that. It's a good entry, terrible risk reward. So if you played the 50% pullback of this bull candle, which it retested on, your stop's there, that works. Your 1 hour is there, which it would explain a little bit of that volume. And 2R is right there. So the move is pretty much done, I think. Everyone's 2R target's almost been hit. Let's see if Apple does this and then pull back. Maybe it goes higher from there. At the moment, the volume's telling me it has a chance to go higher. But everyone that took the trade, this was the trade right there. The pullback of that bull candle with the trap. Stop down there. Your 2R is somewhere up into there. That might be the end of the move for it. SPY. I'm still leaning bearish on the SPY. Still leaning bearish. And this price action right here is telling me that the bulls are not very strong. All right, you pulled down and had a great reversal pattern. Really strong, really good. One thing to notice, no volume on that bull candle. That's something to pay attention to. You need, on confirming patterns, on good reversals, you need a really good volume push. Where did your volume come from? The volume came from the big bear candle taking it out. So again, I'm leaning bearish on this. I'm not thinking bull at the moment. Could I be wrong and we just go to the moon? Of course. I'm wrong all the time. But you need some volume on this. On this big bull move, you needed volume, and there's nothing. So already you're thinking, might not be great. And that is a pretty bad candle, honestly. This candle is not good. Just as this was a trapping candle here, that was a trapping candle there. Bull's getting in. So now, I don't think I have enough time on this either. If I'm leaning bearish, can I do an entry there with my stop up above the high now? Probably can't get a risk reward of that either. 434.28. You just keep telling the stock what to do, and if it doesn't listen, it doesn't listen. You don't take it. Just keep looking for potential setups. 433.47. That is better. I like that much better. And then, I don't go already. It's probably going to go without us. 432.66 for 2 hours. I like that. I don't think I have enough time. I try not to just say, here's a trade. I want, maybe if this could bounce, and it's not going to. Shoot. If we're trading as a group, we haven't been triggered in yet. I need this to kind of, it's already triggered in, so we can't do that. So if I was by myself, most likely I'd be in here. which says high wave candle inside. If the wicks overshoot the previous candle low and high, it is better setup than having a high wave candle within the inside candle. It's always better to have an inside. So let's say you have a candle that looks like this, and then the next candle looks like this, and then the next candle looks like this. So this was the high and the low of that candle. Oh, man, I want that entry. Just as a group, there's not enough time. Again, if I was by myself, I could just click the entry in, but I have to go take a screenshot, put it into Slack, give people enough time to actually get in it, because then they have to go to their broker and set it up. I have to go to my broker and set it up, and we had, what, 20 seconds to get in on this? It's just not going to happen. Man, that's where I wanted it, though. Story my life. It's all good. So again, this is the high. This is the low. This is the high, and this is the low. So this candle is inside the range of this. This candle, the high and the low, is inside the range of this one. You see that? Inside candles are always compression candles. They're always pressure building candles. It's like turning a pressure cooker on. That's quite the trap. I wouldn't want to see that if I was getting in, but still looks good. Candle still got 2 minutes left. We'll see what this turns into. A lot of freaking traps down here. Man, a lot of traps. Still looks bearish to me, though. So if you have a candle, there's your range of the candle, right? The open and the close. And then you have a candle here that opens here and comes down and then just pokes its head barely above and then comes down. That's not an inside candle. It's got to stay inside the range of that. Even though the bottom was, if the top pokes out, it's not an inside candle. Inside candles are pressure cookers. Why is that? Because if you think about it, the candle opens here, the bulls run it up and they lose steam right there, and the bears take over, and the bears run the thing down to here, and the bears lose steam and the bulls take over, and the candle finishes right here. So this is your little body of this candle, okay? That's a good trapping candle so far. This is where the bears could get it to. The bears could get it here. The bulls could get it up to there, and that's all they could do. So the very next candle comes in, and we open up here, and the bears come down, and the bulls take over, and they go bring it up. And the bulls are going, and then the bears take over, and they bring it down, and we close right there. So now here's your next little candle. You like my little clamp? That's not too bad, right? And this could be with anything. It doesn't have to be this high wave candle setup. It's just easier to draw. So what are we now knowing, right? The bulls couldn't get above that. And then the bulls couldn't get above this. The bears couldn't get below that, and they couldn't get below this. That is a good trapping candle. I would not want to see that if I was in short. So if the bulls couldn't get above this and this, and the bears couldn't get below that and that, would it be strong for the bears if the very next candle they did something that they couldn't do and got below both of these? Would that be stronger or weaker for the bears? Right? The bears are now doing something that they failed to do two candles previous. Would that be strong? Yeah, it'd be stronger, right? Just like the opposite way, if the bulls start to push and the bulls break out of an area that they were never strong enough to do for the past few candles, that would be very strong for the bulls. So inside candles are pressure building because it shows you who's winning now. The bulls clearly took over because the bears won there and won there. They pushed it back lower both times, but then the bulls came through and just screamed and cranked out of there. Right. So inside candles are just pressure building because it's determining, especially if the candles if you keep putting in multiple, get rid of that.
Okay. If they keep putting in multiple inside candles, well, now the range is getting smaller and smaller. And then when we break out of it, it should be very strong because either way, because now the bulls are doing something that they couldn't do for the past 20 minutes, or the bears are, right? And that's what a pennant pattern is. It shows strength. It's showing you who's strong right now. Right now, I don't know who's strong, the bulls or the bears. The bulls had their shot and then failed it. This sentiment still is true. The bulls are not very strong until they prove me otherwise and get above that. All right. At the exact same time, the bears have had every excuse in the world to push this lower, and the bulls keep stepping in. So what does this tell us? How can we read some sentiment behind this? We now know that if we get a close below this, the bears are officially in control. We also know if we get a close above this, the bulls are officially in control, right? We have two levels now we can trade off of. And that's what you need. You need something to trade off of, not just, I feel like we're going to go bearish. I feel like we're going to go bullish. Let the stock tell you what it's going to do. You don't have to guess. Just read sentiment. Put the people behind the candles. Chris says, in the case of these inside candles, are you looking for a pullback after the breakout one way or another? Or are you timing the breakout? It depends on your style. There's pros and cons to both. Let's say you buy the breakout, right? Let's say you bought the breakout down here. I know this isn't an inside candle, but let's just say you bought the breakout. What happened to you? You came down. Bull should have never lost this. You were aggressive trying to grab this trade thinking you were going to go nothing, and then you got trapped and it reversed. The downside of buying the breakout is there's always a chance that even though it's an inside candle and then it breaks lower, there's always a chance that it's a trap and then reverses. In fact, there's a pretty good chance that it's a trap. So the people buying the breakout, the cons are it could be a trap. What are the pros? The pros are we might not retest. We might just sink and never come back to the retest for the day, right? So if you waited on a retest, you would have never even been filled on this trade. What about buying the retest of this? So you get candle here, your inside candle here, and it breaks down. Okay. What are the pros to a retest? The pros to a retest is you get to wait and see how strong it actually is. You're not getting wicked in on this. So you want to actually, you get to wait and see, did it actually close below it? That's what we're wanting to see. We want this to actually put a candle close below it, not just a wick and then get bought up, right? So did we actually close? So there's your pro. You get to wait and see what happens. And if it traps and goes, you're like, man, all right, well, I'm glad I didn't get in on that. The con is it might not retest to get you back in. It might just go when you miss the trade. So if you have a high wave candle with the wicks being really long and the body small within the previous candle, and going past the higher low of the previous candle, a large body is considered what? Past the high and low of the previous candle with large body is considered what? Basically, a high wave candle, a candle with long wicks and a small little body, it means that the bulls and the bears really don't know which way to go. It's telling you that they don't know if we're going to go bearish or if we're going to go bullish yet. It's a decision. That's why we love those high wave or even a doji candle after a big move. So if we have a big move down and then you get a nice high wave candle, that's not a good drawing, but you get it, right? At the low, what does that tell us? The bears that have been pushing this down have lost enough strength that they honestly couldn't push it any lower at the moment. At the exact same time, the bulls are not strong enough to push it higher yet. We don't know which way we're going to go. So a breakout of either way usually is a good sign of what strength is about to come. So if you see a big old bull candle with a big body, that's called a morning star reversal. It's just a reversal pattern. It's showing you, okay, the strength is there. The strength now is shifting to the bulls after this big move down and this high wave candle and a big bull candle coming in afterwards that finished really strong above it. Okay, the bulls are clearly starting to get some strength. Does that mean that we're going to just go to the moon? Maybe. It might make one more dip lower to stop everyone out first and then go. All right. There's no guarantee. That's what makes the markets hard. It's like, well, why didn't I just wait for a high wave and then buy the breakout? It doesn't always work. Nothing works all the time. Everything works, just not all the time. So always looking for a high wave candle for momentum. If it breaks either direction, again, yes and no. Yes and no. Everything is going to have about a 50% win rate. But if you have a successful plan and you can lose more on your winning trade, or sorry, lose less on your losing trades and win more on your winning trades, you'll be profitable. And that's honestly how the stock market goes. Everything works, just not all the time. There'll be time in the markets where high wave candles or dojis on a big bottom move and then a reversal works all the time. You'll have an 80% win rate and you'll rake it in. You'll also have months where this is just a trap and then goes lower every single time and you're going to spend a month and a half just hardly ever making an R. Yep. Risk management. Correct. Losing small and allowing your winners to work. And that's why most people struggle, is because they're like, I'm up $50 and they take it. And then that trade continues on because why did they take it? They didn't take it because their plan told them to. They took it because of emotions. Everyone has a plan until they get kicked in the face, right? Or punched in the face. So my plan was to get in here with my stop here and take my profits here, whatever the case might be. And then all of a sudden it's like, I'm up some money. Let's just take it and you get out of it. That wasn't your plan. That was your emotions coming in and overtaking your plan, right? Whoa, I made some money. Let's do this thing. And then your emotions take over. So we talked about this yesterday in the day trading room, the other room that I jumped into. How to control your emotions, because you're not going to be a profitable trader. It doesn't matter how good of a strategy you have. If you cannot control your emotions, you're going to really struggle. Really struggle. You're going to be taking trade profits way too early on winning trades, and you're going to be taking way too much of a loss on losing trades. Because what most people do is, I know my stop is right here, and then it comes down, they're like, no, it'll bounce. So what do? They lower their stop down. And then it keeps going, and then they lower their stop down, and they turn a 1 hour losing trade into a 7 hour losing trade. Well, what happens if you flip a coin and now you lose $30 on tails and you make $5 on heads? You're in trouble. It's going to take you months to make back, literally months to make back this one stupid mistake. Months of winnings to make back one error. Isn't it much easier just to say, you know what, I lost on this trade, lose 1 R, and then go and make that back maybe even later on? But this is what most people do, is they'll lose 7 Rs on a trade and then go, crap, I've lost 7 Rs, but I need to be profitable for the day. Because if I'm not profitable on the day, then that means I'm a loser. That means I'm a bad trader. So what do? They go find another trade and they just go, oh, yeah, this thing should go bullish, and then lose an R. Oh, crap. All right, now they're down 8 Rs, and they go, oh, I'm down 8 Rs. All right, let me go find another trade. And they do more, right? You do more because you can't stand the fact that you're down. You've got to be at break even or profitable every single day, every single week, every single month, every single year, baby. I'm not a loser, so there's no way I'm going to allow myself to end the day red. It's just a bloodbath. And that's how people blow up their accounts. It's that pride, it's that ego, it's those emotions. What's so wrong about being red on the day? What's so wrong about having a red week or a red month? It's all about controlling your risk, not allowing your emotions to come in and screw you. There's nothing wrong. For me, if I take a trade and I lose on it and I'm down 1 R on the day, happens all the time, by the way, all the time. And I'm still a very profitable trader. But if I take a trade and I lose on it, I become more picky, not more anxious and go try to find anything to try to make it back. I become more picky and choosy, and the setup has to be perfect. And if the setup isn't perfect, guess what? I walk away from the day going, I lost money today. But I realize that tomorrow morning, there'll probably be 100 better setups than there were yesterday afternoon. Why try to make my money back later on in the day when it gets harder to trade than to just wait for the morning when there's actually good gaps and good opportunities and good momentum for me to hit 2R winners, right? I'm okay being down on the day. I'm okay being down on the week. I'm okay being down on the month. March, I sucked biscuits day trading. And again, it's not that I sucked. It's just the market didn't match my plan, because that exact same plan had a 90% win rate. I think it was a little bit higher than that, 94% win rate in November. I lost one time out of like 30 trades. I did 30 trades in a row until I lost a trade. And then from there, it started to kind of go a little bit back and forth. And that's what brought it to about around 90%. But literally, I went like, I think 3 weeks without even losing one day trade with that same strategy that couldn't win one time in March. So in March, did I just go, oh, this strategy is done. It sucks now. It used to work, but now it sucks. No, because I've back traded it. And when I've back traded it thousands of times, I became aware of patterns. I realized that there's certain months where this thing just never loses. And there's also certain months where it never wins. And at the end of the year, I'm very profitable. So I don't throw it out. I just go, this is just one of those months where it's not winning. So what do? I do less. I don't do more. I took a losing month in March, and that's okay. Right? It's controlling those emotions. And I'm going to get more into that and more into controlling those emotions. But just want to go on the tangent of, do you see how people self-destruct in the markets? They self-destruct in the markets. They turn a 1R losing day into a 20R losing day. And you know how long it takes someone to make 20 Rs when they're first starting out trading? It takes them months on end. They're lucky to have a 5R profitable month. So if you're lucky to get 5 Rs in a month when you're first starting out and you lose 20 Rs in one day, you're months and months and months behind when you should have just lost 1R. You could have been profitable for all those months, but yet they self-destruct for one day because they lose it. They lose their mind. Rich says he's been there. Me too. How do I know this? I know this from Hard Knocks. I know this because that was me over and over and over again. Don, do I have any videos on YouTube? I do, my friend. This video will be on YouTube. But yes, I have videos on YouTube. Look up Real Life Trading Tony Pollock. There's not a whole lot. I'm working on it. But yes, I have a lot of videos on there. Darian says, I did that with CCIV, trying to day trade it, and my stop wasn't being placed correctly. Now I'm a bag holding, but down only 1R now. Yeah, and that's where it gets dangerous, my friends. For me, it's like, just take 1R doesn't sound so bad anymore, does it? When says you're not a day trader. No, I'm a day trader. I do everything. I don't rely on day trading to pay my bills. I have my other strategies that do that. Day trading is more for fun. I enjoy it. But my style is just consistency. Day trading, if you're trying to pay your bills every single month, day trading would be very tough. Now, at the end of the year, you'll be profitable, but that doesn't mean you're not going to have a 3-month stretch where you just get destroyed. So if you're planning on paying your bills for those 3 months, you need to make sure you have money set aside, right? So for me, I just prefer more consistent strategies where I can bring in monthly income, even on my bad months. But there's, like I said, people make gajillions of dollars day trading. I know them personally. For me, it's not my style, because in order to make all of that money, you have to be open to having quite a few losing months throughout the year. Same thing with swing trades. Swing trades, it's make 20 Rs a month for 4 months in a row and then lose 50 Rs in 1 month. Are you still profitable? Yeah. But people freak out. And the problem is too, is that you might be jumping in on the month where you lose 50 Rs. And so you're down, you're like, this is stupid. And then you just go somewhere else, right? Every strategy is going to have drawdowns. Every single one. That's why I love credit spreads. I still have losing credit spreads. I still have drawdowns, but I have plans around that, right? I have specific plans that I've used for years on end to pay my bills every week, every month, every year. So that's what I lean more towards. I'm more of an option seller. I love selling naked puts, covered calls, credit spreads, calendar spreads. I love doing a lot of these option selling strategies that have very high win rates, that I can be successful and have certain plans to hedge around when they don't work. So that's what I lean on for consistency and a paycheck on the markets. But day trading, if I day traded with a massive R, so my R's for credit spreads and leaps and other option strategies is about $5,000. So if I went ahead and took my $5,000 R and put it on day trading, I could make a lot of money in the markets. The only problem is I'm also going to have months where I lose $80,000. And that's okay. At the end of the year, I'll be profitable a lot. But what I'm saying is I just don't like those dips, and I don't like the peaks and valleys of day trading and swing trading as much. I still do it. I'm day trading right now, right? Or at least trying to set up something. I still swing trade. I just don't do it with a massive R. I do it with about a $500 R-ish. So is it paying my bills? It's helping. But it also, that way, when things are rough, like in March, I'm not losing $80,000 in a drawdown waiting for the good months to come. So it all has its ups and downs, risk reward. So it's just a matter of what fits you and what fits your needs, right? That's how I've been trading full time for years now. It's just what I like. It's what I prefer. But other people don't mind the other dips. And by the way, every strategy will have dips. It's just a different kind or different things. Justice, can you talk about how you do your covered calls and spreads in this class today? I won't, because it's the beginner's room. What's happened a lot in the past is it gets misinterpreted. So people after like 3 weeks will come to me and say, Tony, I just lost $3,000 because you said to sell credit spread here. And I'm like, no, I said, don't do that. So it gets a little bit tough to control the environment with this many people. Like, Jeff, you might be just fine, but someone else that's just now tuning in is going to hear a completely different story than what you're hearing. And that's what I don't want to have happen. So I don't get into my option strategies that much, especially in the beginner's room. I can teach you about options and a few other things, but specific strategies, we can get into, join a mentoring group. I'll be posting a master's class soon about how to do all of that stuff. I've had it too many times, and no matter how hard I try to control it, it always happens. Someone's like, I just lost thousands of dollars because I did what you said to do. And I'm like, not really. And so it gets tough. So they just encourage me not to go over specifics on strategies when it comes to those options. It just gets a little tough, my friends. But join RLT. I have a whole credit spread room for free. You can jump in there. I'll teach you all kinds of stuff. You can follow all of our trades. That's part of your package. Research, can you touch a little on your credit spread strategy? Same story on it, my friend. I can touch a little bit. I can show you what credit spreads are. I'm just not going to teach you exactly how I do it. Not that it's a secret. Again, it always comes back to bite me. and I feel bad. And again, it's not my fault. It's up to you guys. It's up to you guys to take trades. It's up to you guys to be informed before you take a trade, not me. But I always feel bad. It's always tough when someone hears something and then they buy the spread instead of sell the spread. They, whatever the case might be, one little click of a button can guarantee you $1,000, $2,000, $3,000, $4,000 loss. So, Donna says, questions about your SPY. Do you have a stop? So Donna, I went ahead and sold on that big down day. I sold a put against it to lock in a win no matter what happens. So when we came down to here, down here, as soon as we hit this 50, I sold a put against it. And I sold like the 400 strike against it for the same expiration. That brought in enough money to pay for it. So as soon as we started to bounce, I had a guaranteed locked in win, because as we bounced, that put that I sold was making money to offset what this put was losing perfectly. So as soon as we didn't reject yesterday, I went ahead and closed it all out for the same profit that I had down here. Because if it keeps going higher, now I'm going to start losing money, because this put can't make up for everything that long put is losing. Because I bought the long put up here. That's the only way it worked, was because that long put was already so profitable, right? So no, I don't have, I closed out both. Yep. I still have puts open, by the way. I'm still in short on the markets, but that specific trade, when I bought puts on the 13th of July on a new high, as soon as my plan was just as soon as we made a new high, I was buying. I was like, this is stupid. This is ridiculous. We're going down. So I went ahead and bought those long puts. I waited. We got a big gap down to the 50. I then sold the 400 against it for the same expiration. That paid for the put and some. And then as we started to bounce, I was waiting to see if we rolled down off of this is what we should have done. And then as soon as we didn't really roll down, I closed it out. So when I was on the mic, I said, as soon as we break out above this, we should trap. And we didn't. We just kept going. Later on in the day, we kind of pulled back, but there was a lot of strength. I closed it out. Because like I said, as it continues to go higher, now I can't keep the same P&L that I had right here. Yes, my puts, I guess not naked, but the covered put, the short put still is making money on the way up, but it's not going to make money faster than this thing is losing. All right, there was a fine balance behind that. So I just had a plan what I was going to do. So I closed out both. Doesn't mean that you should, right? I still do think the markets are going to pull back. I don't think this is the right time to close out the put. I would wait and for us to at least have one bear dip, maybe back down to 430, 431, and then close it out there. But I would wait. Markets look strong though. They keep on bouncing when they shouldn't. I mean, this was a good trap. We had some follow through, and now we're breaking up above this bear pivot. It looks strong. No matter how many times we just wait for the bear move, it just does not come in, which is just opening the door for absolute demolish, getting crushed. AMD's completing the double bottom. Yep. Yeah, this is a good spot here if you want it, right? Pulling back down. Did we get volume at this low? Nothing crazy standing out, but you did get volume on this push there, which is nice. Retested, came back up. So now the real question is, where did the pros play this? So here's a good example of what we just talked about. Anyone see this high wave candle right here? So we went lower and then we ran into this high wave candle. What does that mean after making a new low? It means that we couldn't decide which direction to go, right? The bulls couldn't push it any higher. The bears couldn't push it any lower. And we ended up finishing close to where we opened. Indecision. So now a breakup above that or below it should give us some idea of how strong, who's stronger. Not always, but a lot of the times. So we pushed up and had strong closes above it. So in this case, buying the retest of this worked out great, right? You got a chance to get confirmation and wait for this big bull candle to close. You're like, okay, well, it's clearly not a trap at the moment. So then you put your entry in there and your stop there, and then it pulls back and it goes much lower because it always does. Always does. It either misses you by pennies or goes way too under. Hardly ever do you buy right at that bouncing spot. Sometimes, but hardly ever. So just keep your wits about you. Again, your plan. Your emotions are saying freak out. Your plan is saying get out here, get in here. That's your plan. So just follow your plan. We'll talk a little bit more about emotions here in a little bit. I went over emotions quite a bit in the last, I think it was yesterday in the day trading rooms. I don't know if anyone was around on that, but I'll repeat a little bit of what I said then. But yeah, just an analysis on this. And then you want to see an increase in volume at the buying spot, which we did. So when we pulled back down and got filled at that buying spot, you saw an increase in volume and then a push. So that's good. I mean, that was the entry. And the volume is telling me that this was the entry, right? Look at this volume here. Looks really good, right? Confirmation breaking out above it. And then you had confirmation volume again as you pulled back to it. And then more important than that, you have follow through after the volume comes in. So if that was the entry, I'm doing that to show you this. If you're showing up late to it, if I'm going, look, this realistically was the entry. So if I'm going to buy it up here, I'm chasing it. So let's just say our stop was there, our entry was there. Where's everyone at? Are they already at 2 Rs? There's 1 R. They are not at 2 Rs yet. Their 2 R is right into the high. So if they're not at 2 Rs yet, I'll consider getting in as long as my R matches their R. So how can I do that? Let's pick up another one here and say, what if we pulled back to this 10 EMA right here? So let's put on this new one. What if our entry was right at that 10 and my stop was down below that pivot? Would that give me a 1 R target to where they're at? Nope, it does not. So that means I can't raise my stop. I already know that. My stop has to go below this pivot right there, which means my entry's got to be lower. My entry's got to be at least to right there. That gives me the same risk reward, 1 R at everyone else's 2 R. So this would just be a 1 R trade. That's how I set up trades later on in the morning if I've already missed the entry. I go and figure out where's their targets most likely at, and then I want to match my target with theirs. Usually I want it still to be 2 Rs. I don't want it to be a 1 R when at their 2 R, because I don't like just 1-to-1. If you have a 1-to-1, that means you need to have a higher than 50% win rate overall, right? If you're making $5 on heads and $5 on tails, and losing $5 on tails, you better hopefully hit heads more than tails, right? So if you're flipping that coin. Okay. So that's what I would look to do on this. Does that mean that this is a good entry? I don't know. Maybe it works, and this is a good stop location below the pivot, the higher low. Try to grab 1 R. So we can see how that plays out if it ever fills us. But most of the time, I just sit back and go, I missed it, right? Yep, SPY would have been stopping me out right now. I'd have been wrong. I would have been trapped. See, the cons of buying the breakout. There's a chance you get trapped, right? Whereas if I would have just waited for the retest, I would have seen, oh, wow, okay, well, never mind. I had to close below that before I even set up my trade. Did not, so I never set it up. Never were in this trade. And then this was a pretty mean trap as well. This big old bear candle coming in, taking out that wick. Remember, this is an inside candle. Look, you have the range of this candle here and this candle, and then that and that. That is an inside candle. I'm pretty positive. Yep, inside candle. So whichever way we break on this is usually the more strength. And we broke strong down. One thing that you could look at What's one thing, one indicator on my chart that's going to tell you maybe not to trust this strong breakdown? Volume. Yep, Joel killed it. Joel killed it. Am I saying that right? Joel? Jewel? Let me know. If it's Jewel, type in a 1. If it's Joel, type in a 2. Sorry, my friend. 1. Okay. Yeah, you're welcome, my friend. Exactamundo. Volume sucked. Like I said, volume should increase on the entry. This was the entry, which means you should have increasing volume compared to the previous candle or two. We did not. So don't trust that. And again, do you know that if you're buying the breakout? Nope, you don't know that. You don't know what the volume is going to be till after the candle closes. So if you're buying the breakout, you can't use this extra tool to help you. If you're waiting on the retest, we got the close, but then you're looking at the volume compared to the previous candle and going, yeah, it sucks. I might want to wait before I go ahead and put my entry there and my stop there. Again, is there a magic indicator? No. But if you know how the markets work, you can use indicators to help you confirm what you're already thinking. Markets are just, man, they are strong. And they are strong. And they are setting themselves up for one heck of a pullback. If you're thinking this is the buying time, if this was a 5-minute chart right here, would you be buying right here? What did we just say on a 5-minute chart? How many candles in a row? Overbought on the RSI. What do we always say on a 5-minute chart? Wait for the dip. Right? Or else there's low to boat. Yep. That's what RLT Australia said. No, I'm just kidding. No, I'm just kidding. I'm just kidding. Ricky, I love you, man. No, dude. RLT. Did you guys know we have RLT all over the world? We have real life trading Australia, Europe. We have real life trading India, which is coming live soon, which is pretty amazing. It's coming worldwide. And by the way, Australia is killing it. They're probably some of the most profitable trades from Ricky that out of all of RLT. Go Team Haas. RLT in Canada yet? Nope, not in Canada yet. It's pretty much RLT North America so far. Except we lack the Spanish for our friends. We have UK, my friend. Yeah. Yes, sir. India hosted by Maloney. I know. It's so awesome. We're growing faster than we could ever comprehend. And that's because we're not out here with our Lamborghinis and cars and being like, just take this trade and make $8 million. And by the way, pay me $5,000 and I'll show you how to do it. And then you pay the 5,000 and you realize all he did was say, buy when this EMA crosses this. And you're like, well, frick, dude, that's on YouTube for free. Why the heck did I just pay you $5,000? And where's my $1 million tomorrow, like you promised me, right? It's the stock market education world is full of this bull crap scams of people that just are taking advantage of others. They failed to mention that they have a $20 million account, so it's really easy for them to make 10% of that account in a month, right? So they make $2 million a month, but I have a $20 million account. But yeah, you can make $2 million a month with your $6,000 trading account for sure. No, it's not going to happen. I'm sorry. Not going to happen, my friends. Right? So just RLT stepped in because there's so much garbage in the stock market education world. That's why we're called real life trading. We're going to show you all of our losses. We're going to show you what it's really like. We're going to show you that it's not easy and get rich quick. We're going to show you what it takes to become profitable and change your life. But can you change your life? Yes. I'm a walking, living example. I found real life trading when I first started trading. Maybe a C7. Maybe. I first started trading full time, not thinking I knew what I was doing, but really wasn't prepared for what I was getting myself into. Um, Found real life trading, and I would not be here without them. I'd be back to my old job. Honestly, I would have failed miserably. Would have failed miserably on my own. And this community helped pull me through. All these guys, we have traders that have $20,000 R's. We have traders that have so much money in their trading account, you wouldn't even believe it. And yet you'd see them and be like, there's no way. Right. There's so many experienced traders. Why are they still a member of RLT? Why? Because the community, first off. And because as a community, we make more money together. I can go on Slack right now and share one of my trades with others that help them make a lot of money, and they do the same for me. I'm not looking at this and they go, hey, if anyone wants to know, I'm doing this right now. I'm like, oh my gosh, that's a great trade. And I do it too, right? It meets my plan. But also at RLT, we have the idea of once we make it, we turn around and lift others higher than we are. It's not about, Jeremy could have stopped 7 years ago and been set for the rest of his life. And if Jeremy would have stopped, I would still be driving a truck today. But yet it wasn't about him anymore. And it wasn't about him trying to make money. If he was trying to make money, we wouldn't give away $10,000 of education for free every day. Right? We could make so much more money. I think our education quality is higher than any other company out there. I'm a little biased, but it's amazing. We don't cut corners. It's not like we're like, well, here's the good stuff when you pay for it. We just give you the good stuff for free. We get sued because we give away the good stuff for free. Other companies that are charging thousands of dollars to teach people this stuff, we just post it for free on YouTube and they sue us and they don't win because they don't own the copyrights to the market, right? If we wanted to get rich, like filthy rich, we would not give away all this education for free. But why do we? Because we make enough money on our own trading. I don't need to make $1 million a month off of everyone else that's trying to learn how to do this. From the single mom that's working waitressing all night long and trying to learn how to trade so that she can potentially change her family's life. From the dad who just got laid off from COVID, who's trying to keep a roof over his head. I don't want to charge them $5,000 for them to learn the basics of the market. Here's everything for free. I'm going to give you everything that you need to be successful. Now it's up to you. Are you going to put the time in? Are you going to learn the skill? Or are you going to give up after 3 weeks and you lose $1,000 and you're like, screw this is dumb, right? It's up to you now, but we've given you every tool that you need for free. It's on YouTube, thousands of videos on YouTube, real life trading. Subscribe. We post content almost daily. At Real Life Trading, we want to lift others that are struggling up because at one point I was struggling. I was struggling bad. I hit zeros in my bank account, everyone. Zeros. Who's going to admit that for the world to hear? I hit zeros in my bank account. I was struggling so bad. And I didn't realize I hit zeros till I was at Walmart buying groceries. And it declined, looked at it, and we had nothing in our account. Zeros across the board for the first time in my life. Right? If it was not for real life trading to at least give me the mindset to keep going, to find a way. Money grows on trees. I was like, dude, money doesn't grow on trees because I can't find money. I'm broke. And Jeremy goes, Tony, money grows on trees. Find a way. If you want to do this, find a way. Guess what? I found a way. I survived. I survived long enough to learn how to do this. Right? Find a way. It's not going to be easy. This is the best job in the world. I said the other day that I only work a couple hours a week, and that's true because the rest of this I don't consider work. When I talk about work, I'm talking about actually looking and setting up trades to pay my bills. That's work, and that really is a couple hours a week for me and my strategies. The rest of the time, I do what I love. And what I love is to help other people that are struggling because I've been there. I've been there. I know how hard it is. I know what it feels like to cry yourself to sleep every night because you're failing, because you don't know how you're going to pay your mortgage in 3 days. I've been there. And I know right now there's probably someone listening to this that is feeling and going through the exact same thing. I am here because I choose to be here. I am here because I want to lift someone not up to where I am. I want to lift them higher than I am. Right? Darian, I want you to be a better trader than I am. That's my goal. You said your goal is to quit your job and trade full time. Bro, let me know how I can get you there. Let me know how I can get you there. Did you know that my goal in life is to help 100 people a year quit their job and trade full time? Did you know that's my goal? Darian, hit me up, bro. Let's go. I said on a coaching session, go to Real Life Trading. Sign up. If you want 10 minutes of my time, email me. I'll give you 10 minutes of my time. Whatever I can do to help you out. I honestly want to help you. That's why that's why I wake up and I do this. I'm already set. Jeremy's already set. But now it's up to me to help others. Ryan, DM me, man, for sure. Karen says, you're ready for another one. Let's do it, man. Let's do it. Do you have much experience? Do you have some experience with options? If you don't know what options are, then my beginner mentoring group is great. If you're like, man, I am brand new to options, barely know what a call and a put is, then a beginning mentoring group is awesome. I don't know if I've sold out yet or not. New to trading. Beginner's room is, dude, beginner mentoring group. Let's see if it's still, I might have sold out, but hopefully not. Let's see. Let's see. Sold out. Sorry, bud. Sorry, man. That's normally how it goes. We post them and about a few days later, they're gone. But hey, bro, hit me up on Slack. Like I said, I'm happy to give you 15, 20 minutes of my time. Let me at least get you started and figure out where you're at. Let's go over a few of your trades, whatever you want. Hit me up. I'll send you my little calendar. Let's talk for 10 minutes. It's not going to cost you anything. Sign up for a one-on-one if you don't want to wait another 2 months. And then also I have, Darian, take the intro to options course we already have, because my credit spread master course is going to come out soon in a couple months. We're finishing things right now. And that thing is going to be awesome. So you can buy it. I think it's going to be like $500. You'll make $500 in the first trade. That's the best deal in the world. Show you how to do all of it, walk you through everything. And then, like I said, sign up for a one-on-one. You can do a 3 package with me for pretty much the same price as a mentoring group. And in those 3 sessions, I'm only focused on you, right? In a mentoring group, I have 6 or 7 other people that I need to make sure that everyone's getting their needs out, right? But on a one-on-one, it's you. It's your pace of learning. It's all that. And by the way, my price on one-on-ones is about to go up. So if you want to jump in now, why it's cheap. So jump in now. Rob says, I am in a one-on-one with Tony currently this week. Man, love you, bud. Appreciate that. But seriously, that's my goal. That's what I'm trying to do. That's why I'm here. That's why I joined Real Life Trading. Because this isn't work to me. This is my life's mission. I want to help others that were in the same boat as me. Even if that means not quitting your job, you just want to make an extra $500 a week. That might be life-changing for someone. An extra $500 a week, a week or even a month, right? $500 extra a month might be life-changing. Too late, I already quit my job. Ryan, dude, that was the approach I took. I quit my job thinking I knew what I was doing. Oh man, I got wrecked. Realistically, on the markets, I knew what I was doing for the most part. It was my emotions that just screwed me. I mean, think about it. So you have a $2,000 mortgage that's due in a month. Okay. So I've got a month to make $2,000. In your first trade, you lose $500. You're like, okay, well, I've got a month to make $2,500. And you take another trade and you lose $1,000. You know, okay, I got a month to make $3,500. And then you start spiraling out of control. You start raising your R. You start putting more money on it because now you have less time to make even more. And then you just, before you know it, you need to make 10 grand in a month. It's tough. Mentally, I was not ready for it. But you learn, right? For me, that's what I needed. I needed to go through that. Experience it, learn how to get it, learn how to not give up, pick myself up, figure it out, and then be better the next time. Right? That's what I needed. That's what worked for me. All right, let's check this thing out. So Playboy pulling back on a monthly, almost, this is getting really close to the buying spot. So I want to be buying somewhere off of this 10 EMA. I'm going to raise that up just a smidge. All right. We're getting close to this guy. One more push lower, I might be buying some. Crocs, did you end up going lower? You did. Yeah. This would have been a great trade. Just couldn't get a setup on it. COVID quit my job for you a few months ago. Yeah, I know, man. We're getting you on track. We're going to get you there. SPY. Q's, no volume up here. So that's good. That means the trend will most likely continue. Any volume on the SPY? Not really. Nothing crazy. And we close above that. That was very strong. We did it. And volume came in on that too. That break. We followed through with some volume at the new high. Pretty good. Tesla sinking down. Didn't hold it. This is not an inside candle because we broke out of the high, right? You see that? How these 2 days here, the low of this candle is down here and the high is there. So yes, our low was inside that low, but our high broke out. So there's no longer an inside candle. So it doesn't carry the weight of breaking down on that. Although it's not strong that it is breaking down. But earnings are coming up and it makes sense. All right. Any other questions? I took trade on BYND. And if I was blabbering and missed your comments on anything, please just repost it. I'm sorry, the chat pane fills up so fast when I'm just on my little rants. So if I missed you, please just repost it. I promise I'll get to it. Okay. So RIA is 130.25. You're in on this one? So RIA probably, you're all out. Okay. RIA probably took the 50% retracement of that bear candle, right? So instead of taking the breakdown of it, you waited for the retest. That's what it looks like. And then stop, went to, let's see here, 131.25 dollar. Cool. Get that on there. So Target 1 around there. Got filled, pulled down, hit target 1, and then target 2 is right here. All right, so RIA, you're all out. It has not gotten to your target 2 yet. You got out at 129.25 right here. So just your 1R. How could you have done better? Okay, RSI got too low, so you got out. Okay. So just know that, again, the RSI being low doesn't mean that the bouncing is yet, but it is starting, it's low. You just don't want to get into a new trade, but that doesn't necessarily mean that the move is over with. Could be, but it could not be. So Rhea, was that your plan? Do you have a plan? Is that written in your trading plan to do that? Or was that more just emotionally driven of, I don't like the RSI, I'm just going to take my profits? What do you think that was more a judge and a gauge on? You tend to get out. Okay. So again, is that your plan? Okay. Have you back traded that? Do you find yourself to be profitable after hundreds of trades of doing that? On BYD, yes. Okay, cool. Well, then you followed your plan. There's nothing else to say. Good job. Could it have made more money? Sure. But if you're following your plan, it doesn't matter if it makes more money. Your plan is profitable, so follow your plan, right? So good job. You killed it. I think this is a good entry. I love the bull candle up here and then the breakdown of it. That's sweet. Strong breakdown, trapped down here and bounced. Again, big volume here, but that volume could have been all Rhea shorting, right? Right. So again, with this guy, I would want, I think your 1R, you set this up really good. I'm pretty sure your 1R was, yeah, it was above that low. That's really good. Good job, Rhea. So you, no matter what, you'd want your 1R to be at that pivot, which it is. So then as soon as it hits 1R for me, this is what I would do. I hit 1R. Whenever I hit 1R, I can go ahead and move my stop down some. So I did not get 2 bull candles. So this is technically not a lower high for a bear move. But because it hit 1R, I'm allowed to move my stop down. So I probably would have just trailed my stop around the 20 EMA. So maybe lower my stop to there, not quite down here yet, because I'm still waiting on 2 bull candles. And I'd still be waiting on 2 bull candles. So at the moment, I have not lowered my stop down yet. It's still right there. Waiting, being patient. It's like, well, that's a lot of risk on the table. It is, but I was already good losing 1R when I took this trade. So I don't care, right? If it's going to work, it's going to work. If it's not going to work, it's not going to work. I've already made an R. I've lowered my stop down some, so I'm going to lose small. That's goal number 1, lose less than an R. Goal number 2, hit 2 Rs, right? So as target 1 got hit, 30% off, lower my R. I'm going to lose half an R now. Sweet. Now I just wait. So we're still waiting for this to get down to your 2 Rs. If we could figure out how to get 2 bull candles in a row, we'd lower our stop. But honestly, it tends to hit 2 Rs before I even need to move my stop if I don't get 2 bull candles in a row. It's the same thing on a bull move. If I'm waiting on 2 bear candles in a row on a pullback and then a bounce up for me to move my stop up, and I only ever get 1 bear candle and then it goes, that means it's strong. So just let it keep working. Let it keep going. Same thing with this. This is strong. If it can't manage to put 2 bull candles in a row and it just keeps falling, that means you're strong, right? Let it go. We're about to put 2 bull candles right now. And there we go. We just did. So now with these 2 bull candles, if we break the low, you can now move your stop to here. And you're going to lock in 1R plus some change. There you go. If we bounce, then we have to wait for a roll back down below this, no matter what. So we're waiting on that. Waiting on 128.71. Once we get down there, we can now officially lower our stop. And you just locked in a winning trade. There you go. Boom. You gotta wait for it to get down there, though. Looks good. The bounce is coming soon, though. No doubt. This is really good convergence. Right, Rhea, we've talked about this, is what Rhea was looking at. That was a bad line. Flat line here, going down there. Oh, that was good. There we go. I'm getting better with my mouse. Rhea always dogs on me with my mouse skills. She's like, Tony, you're terrible. You're just, man, can you please get better at your mouse skills? My artistic skills. That's right. That's the wordage. Artistic skills. I have good artistic skills, man. I don't know what you're talking about. Me and Rhea, we go way back. We go way back. Just like golf. And don't get Rhea started on GeoGuessr. Just don't even do it. There we go. Okay, there's your breakdown. So I would move my stop down there. I don't think you could put it here. I'd probably trail the 10 EMA. So I'd probably hit it right there. And then just let it hit your 2Rs. And it's not even going to matter that you moved your stop down. Oh, here we go. I know. Here we go. That's a good trade, Rhea. Way to go. You followed your plan. Again, this thing is working great. If it can't even manage to put in a few bull candles in a row, go for it. Is this an inside candle right here? Right. These two. Is that guy an inside candle? Yep. So if we break in any direction, it's usually strong. Is this one another inside candle? Maybe we broke out, but I'm pretty sure. High is 129.46. 120, those are tweezers. That is another inside candle. So that's 2 inside candles in a row. That is 2 inside candles in a row. You have 1 inside, 2 inside. So what does that mean? More pressure is building. So whichever direction we break down on or up on should be relatively strong. We broke down on that on very low volume. So if you're playing the retest on that, would you set it up? I would not personally. RSI that low volume. Would it have worked? Yep, would have worked. Again, everything works, just not all the time. I would not have bought that entry with this volume. Not going to happen. Because in the long run, they don't play out. But if I was already in this, like I said, on Rhea's trade, my stop still up here. I'm waiting for 2 bull candles. Finally got 2 bull candles and a breakdown. And our 2R is down here. 128.25. You just stay alive in the trade. Just keep waiting. So again, this is a good example. Just because it works on one thing, it might not work on another. And nothing works every single time. Like just because that low volume and then it continued lower, or this one, I mean, and it continued lower, that worked, whereas the SPY did not. But for me, I want to see volume whenever I see an entry. If the volume's not there in an entry, I'm not going to trust it. If a massive hammer comes in at the bottom of a new thing and there's no volume, I don't trust it. I don't play it. I need volume to confirm the move. And did you get your 2Rs? Oh, pennies. Pennies away from 2Rs. So that's how I would have done it. I don't know if there's 2Rs. I think it hit it. Nope, not yet. Still that optical illusion for some reason. I don't know how you could have done better. Your entry was spot on. Your stop was in the right place. You just followed your plan. You did good. Right on. Apple. The strongest stock market in the world. That's right. Rhea's putting in the work. So when I was learning, I never missed a day trading room. And then I would back trade for 7 hours a day, every day after the market closed, because I didn't have another job. I traded full time, even though I wasn't making any money and we were just burning through savings to a point where we didn't have anything left. But I didn't have another job, so I had the freedom to do that. But you've got to put the work in, right? It's just like going back to college, going back to night school. Got to be back trading. You've got to be learning, and just watching someone else's screen for months at a time really helps to train your eye what to look for and what to do. That's how I learned how to trade.
was just watching Jeremy. Back trading every day has helped so much. Yeah. Any guidelines for back trading? Great question, my friend. Yes. Have a set of rules before you back trade. Don't just freelance it and be like, all right, well, I'm just going to flow through and just buy whatever I think looks good. You need to be back trading an actual strategy. Okay. And it's good to back trade. Like for me, now that I have my strategies back tested and they work and it's been going good, I'll back trade just for fun and I'll try different things. But starting out, have an actual strategy with rules that you can easily follow. They're not like get in on a pullback. Well, what does a pullback mean? How about get in when a hammer forms off of the 10 EMA on a 5-minute chart, like specific. And then what do? You get in a couple pennies above the hammer with a stop limit, and your stop goes, a certain movement below the bottom of the hammer, right? Some space or right at the bottom of it, whatever your plan is. It needs to be specific, so it's really easy to follow. So if I were to look at your plan written down, I would know exactly how to trade it. Okay, so no vagueness to it as best as possible. Your plan needs to tell you everything. When do you move your stop after you're in? Like we just looked at Ria's trade. When do I move my stop? My plan says I can move my stop after 2 bull candles come in, 2 bull candles, and then a new low. That's now a lower high. My stop can now get moved once this comes in and we break that, right? So that is real quick. Interesting volume at an all-time high, and we're pushing from it. If we keep taking this out, that could be a topping pattern. Anyways, back to my little rant. So your plan needs to tell you everything what to do. When you take your profits, how much? Do you take 10% at 1R? Do you take anything at 1R? Once you have an actual plan written out, it doesn't need to be 80 pages long. It just needs to tell you what you can and cannot do and when to do it. Right? Like my plan, no matter what, I can't move my stop for the first 30 minutes unless 1R targets hit within that 30 minutes. Other than that, I can't move my stop. Doesn't matter if a lower high comes in. I cannot move my stop for the first 30 minutes. All right. So once you have that, back trade it. And when you're back trading it, the temptation is going to be, oh, if I just would have moved my stop quicker, I would not have lost on that trade. And then that happens like 3 times in a row. You're like, oh, all right, well, I'm just going to start moving my stop. And then you change your plan, right? You have to stick with that same plan throughout the entire back trade so you can get information off of that plan. So after 100 trades or 200 trades or 1,000 trades with that set of rules, you should have a lot of things in your brain. I usually will go over here and write things down on the side, like I might not want to move my stop so fast. And I just take little notes so that when I'm all done back trading 100, 200 times with that specific rules, I then go back and implement a few of these things into my new trading plan. So I have my results, and then I implement a few of these things and see after 200 trades if these helped or hurt. And again, I don't change it until afterwards, and then I implement a few more things, and then I go through and do 100 times. And then I implement a few, and then you just dial it in over time. And it's always changing, by the way. I'm always back trading new things into my stock trading plan. So that's how I back trade. Those are a few keys, and those are most of the time where people mess up. You're back trading not just to help you learn, and it really does help you learn a ton, but you're back trading also to get an idea of how profitable this strategy really is. The biggest thing for me when I was back trading, it was how much it opened my eyes to how often you could lose and still be very profitable. For me, I was getting so down when I would lose, win, lose, win, lose, win, lose, right? Like I just felt like a loser. But when I back traded and I just let the back trades actually work, I realized I lost all the time. And yet I was way up at the end of the year. I was like, holy crap. So finally, when I started to trade and I started to lose all the time, I was like, it's totally fine. It's normal. When before I was like, what's wrong with me? Why do I suck? Now I'm like, man, it's normal. This is how it goes.
It's normal. I'm going to be profitable. If I just stick to this plan, I'm going to be profitable. I might not be profitable today. I might not be profitable this week or this month or next month, but I will be at the end of the year, right? That's what back trading did for me. Not only did it help me figure out profitable strategies, but it taught my brain how the markets work. And then your brain doesn't freak out and have these expectations. This is a good move down. Your brain doesn't freak out and have the expectations of, why aren't you winning? Like, dude, I am, brain. This is how it is. This is how the markets are. Back trading is so crucial. You cannot be successful without back trading. It's not going to happen. I put off back trading for 6 months, and I'm convinced that's the reason why I wasn't profitable for the first 6 months. After I started back trading, it took me about a month to back trade. Like I said, in that 7 months, I finally started to make money. And guess why I started to back trade, and guess why I started to make money? I spent the money to meet with Jeremy. And he said, Tony, why aren't you back trading? I don't know. Back trade. And by the way, quit looking at your charts for this much time, because your setups look good, but you're finding a way to screw them up. Those are his 2 pieces of advice. And wouldn't you know, boom, off to the glory train from there. 7 months of me losing, I can't tell you how much money, blowing up my account and all this stuff, because I wasn't willing to do what it took. Why? Because I was lazy. Who the heck wants to sit and back trade for hours and hours and hours a day trying to get 100 trades, 200, 300 trades on a strategy to see if it's even profitable? That's no fun. That sucks. But it's so crucial. Yeah, so Shoshi just posted a whole bunch of links in the chat pane for YouTube. We have over 7 hours of back trading. What? What is this? Back trading with Dan and Robert. I think my little ugly mug plays a visit on this sometime too. I think I could be in there for too long, but we have back trading in action on YouTube. And how much did this cost? So was this? I think it's $20,000 to watch this video. So, yeah. So it's only $20,000 to watch this video on YouTube. It's free? What? What's wrong with, how does real life trading make any money? They give everything away for free. It's free? Oh my gosh. When we say our mission is to enrich lives, we back it up. We're serious about it. We could make so much money charging for this stuff, but it's not about the money. Go to YouTube and search real life trading, back trading, and you'll have many options. That's right there. If you want to learn how to back trade, there's hours and hours of back trading. There you go. Check out the markets. Ooh, that's a good pullback. No volume really standing out up here. It's not like Apple where I got a really good push of volume at a new high. That volume is telling me a lot of people taking profits. This isn't strong, but there is a decent chance that we get back up to this high today. Based solely off of volume. We don't have to, but I wouldn't bet against it that we won't. We also have live back trading as fundraisers. Yeah. So we do all these live back tradings and then just ask for donations, right? To help us against righteous causes, help change the world. So we're just donating time and asking you, instead of paying us, to take the value you're getting and pay to help good causes. So yeah, we do those quite often. Keep an eye on it. If you follow us on social media and just on our website, you'll see when we have things planned. And we do them frequent enough. That is it. All right. So before I get off the mic, we have one more day tomorrow. Tomorrow's the last day of the free week. If you know anyone, friends, family, coworkers, have them sign up. It's not too late for the free week, right? It's still got today and tomorrow. Sign up. If they can learn one thing, they don't even have to join RLT. Just if they can learn one thing in these free weeks that might help them bring in a little bit more money for their family, or at least just change the way they think. And hear someone say, hey, it's not easy. and it was hard for months on end, but you can do it. You can learn this and just stick with it. The only way you won't get this is if you quit. That's it. That's the only way. So invite some people out, help them change their life. If they're interested at all, share the word. We honestly want everyone in the world to know you don't have to pay for education for learning how the stock market works, right? There's advanced courses that, yes, you'll pay some money for, but 98% of our education is on YouTube for free. And it's good stuff. It's higher quality than the stuff you would pay thousands of dollars for. So if someone's interested, just tell them, hey, you don't have to pay money for this. Just go to Real Life Trading. It's all there for free. And there's no commitment. It's not like, hey, if you watch 3 YouTube videos, you got to sign up. Said, you can come trade with us. We would love you to. But our goal is to help you in any way we can. And the best way we know how to help right now is to give you the knowledge. It's just like free college. It's like, what if someone was saying, hey, you can go to med school and it's not going to cost you anything. You got to put the work in. You don't think Jeremy does a sales pitch until the advanced class? Exactly. If you want to come trade with us, come trade with us. There's a lot of value. There's a lot of money to be made with us. I'll tell you that. But we at least just want to get you off on the right foot. Just get you out there so you can make some money. All right. Emotional control, my friends, my family. This is the hardest part of trading. Hardest part of trading is emotional control. It's what separates the successful traders from the people that just cannot make money in the markets. And there's a lot that goes into emotional control. There's a lot of aspects that go into it, but I'll cover a few that I see all the time. Okay. Number one, and it's not necessarily the number one reason, but just the first thing that comes to my mind that I want to talk about. Here, let me get my whiteboard. This is how I talk. It's like I honestly can't do anything unless I'm sitting in front of the computer with something to draw on. I don't know why, but it's what I do. It's just what I do. So, and this is all being recorded. It'll be on YouTube later today. So don't feel like you have to hurry and take notes. You can watch it again. Okay. So one of the reasons that people struggle with, I would say, in the markets is they care about something we call money. It's hard not to. Our lives revolve around it, and money is that root cause of most of the emotions. And there's a lot of sub little avenues off of that we'll talk about. But money is tough. How do you overcome that money? Well, you got to realize there's two different styles. There's two different personalities or mindsets around money. You have the fear, right, of money, of if I let this go, I might not get it back. Why is it hard to give a homeless person $5? Because I worked hard for this money, and it's, how hard it is to make $5. It's mine, and I need it. I need this money. It's hard to get money. I need it, right? You have the scarcity mindset. Money is hard to come across compared to the mindset of abundance. Either one of these has nothing to do with bank accounts. You could have an abundant mindset with $2 in your account, and you can have a scarcity mindset with 100 million in your account, right? It has nothing to do with the account size. It has everything to do with the way you view it and the way you were raised. I was raised very much in the scarcity mindset. And I had to change. And that's what hurt me a lot in the market starting out, is I had to learn how to just let it go. I had to learn how to be abundant. So it's hard, right? It's the idea that if you walk up to someone and give them $100, it's that mentality of, because I gave someone $100, I'm going to now receive $300 somehow, some way. $300 will come back into my life. It's that belief, that mind shift of money's everywhere. And I can tell you right now, it's true. It's insane how that works. Whenever I give away money, I get like 10 times return almost every single time. And it's just like the law of the universe. I don't know what it is, but it's stupid how fast it comes too. It's not always, but for the most part, from my experience, it's almost like that day or the next day I somehow come across $1,000. I'm like, well, dang. Well, I'm glad I gave that person $200 before. It happens that way. It's crazy. Jeremy shared a story one time where when he finally made it in trading, he's like, I'm going to donate half of my account. So he donated, I think it was $250,000 or something like that when he finally made $500,000. He got his account up to $500,000 or something like that. I can't remember exactly. He said literally the very next day that he donated that money, someone called him up and said, hey, Jeremy, I want to pay you $250,000 to train me how to trade the stock market. And he goes, are you kidding me right now? And he's like, no, I'm dead serious. He just got an inheritance for like 100 something million and he paid him $250,000 to train him. Literally the next day, he got the exact same amount that he donated. And that's a true story. Jeremy will tell you. It's insane how that works. And so it's changing your mindset first off of the abundance. It's really hard to trade with a scarcity mindset because then you're so focused on, I can't lose. I can't lose. I can't lose. There's only one problem. You can't control what the market does. It's out of your control. The only thing you can control is following your trading plan and trading your setups when you see them. That's the only thing in your control. That's it. Everything else is, well, let's see if this works or not. All right. So money plays a hard role into that. So how do you overcome that? I would say a few things. Learn how to let go of money. Go donate money. I told the story a few days ago, and just whenever Allie and I legit had $50 in our bank account, like our grocery budget was like all that $50. We had bills due. And my wife's like, I'm going to take $20 to go buy cans for this canned food drive or something like that. It was like half of our grocery budget. And I was like, we kind of need that money, right? Scarcity. We need that money. And my wife is like, yeah, I know we need it, but I'm going to do it. And that helped me to say, you know what? Sure, let's do it. And it started to shift my mindset from scarcity to abundance. We didn't have anything, but yet you can have an abundance mindset. And I took that same idea and I said, you know what? If I lose on this trade, I'm just going to consider it a donation. Someone else just made money. It's my donation. Take it. I don't care anymore. I'm going to view it as a donation to help someone else out. Someone else needed that more than me. Changed the way I viewed it and said, you know what? If I donate it, I'll get 10 times more in return. And wouldn't you know, I started to make money in the markets. Why did I do that? Because I accepted the loss. You've got to accept the loss. I'm going to draw this really bad, but accept the loss. I have this written on my desk to this day. I wrote that note that day to accept the loss. And that's still sitting on my desk in front of me right now. That's still the motto I live by. Before I ever get into the trade, I already write off the fact that I'm going to lose 1R. Before I put in a day trade with a credit spread, anything, I go, okay, this $500 is gone. Gone. It's done. It's already gone. I've already given it away. I've already lost on this trade. So whenever I set up the trade and then, it pulls back and I get in and then it starts to not work, am I freaking out? No. I accepted the loss before I even got into the trade. I donated that money before I even hit submit to my broker. So if it goes straight to 1R, who cares? I lost an R. I already gave that up. So am I quick to move my stop when I accept a loss? No. How about the opposite scenario of how about when the trade starts to work? Do I freak out and go, oh, I'm up $100, and then a big bear candle comes in. It's like, oh no, here it goes. I was up $100. I should have just taken it because now I'm close to break even. And then it starts going lower. What do? I already planned on losing 1R down here. So why would I freak out over a bear candle? And then guess what happens? Takes off and goes to 2R because the market loves to screw with your emotions before the move happens. Loves to. That's why every single good entry for the first 30 minutes is really scary and you don't know if it's going to work. If you're getting in at a good entry, this is true for swing trading, investing, day trading, you don't know if it's going to work. And that's why most people don't do it, because it's too scary. And why is it scary? Because they're scared to lose money. If you're scared to lose money, are you scarcity mindset or are you abundance mindset? You're scarcity. You're thinking money will never come back to you. If I lose this $5, I need the $5. I've got to have it. I know that person needs it, but so do I. And now, I want you to hear me right. I'm not saying go and donate everything and so that you can't pay your bills. That's not what I'm saying at all. It's the mindset of being okay to let go of money, realizing that it'll come back to you. And that's not throwing your budget out the window. That's not saying don't have a budget. And that's not saying put $100,000 on this trade. That's not what I'm saying at all. It's just the mindset, right? So accept the loss. It's okay. It's okay that you lose an R, right? Back trade and you'll realize you're going to lose a lot of R's, but you're also going to make a lot of R's if you just follow your profitable plan. And at the end of the year, you'll have months that you got destroyed on. You have months you did well on. At the end of the year, you're going to be up if your plan's profitable, right? So, or maybe not in the long run, right? It might be in 3 months. It might be in 6 months. It might be in 5 years. But in the long run, that plan will play out, okay? So accepting the loss, that's part number one. Part number two, I would say, is quit tying your self-worth to your bank account. Self-worth, your image. This is the problem with everyone in the markets and really in life. This is the reason why people jump off of buildings during the Great Depression to kill themselves, because their self-worth was tied to money, was tied to what people thought of them, was tied to, I just lost all of their money, so now that makes me a loser and I can't live with myself, right? This is what people struggle with on everything, on Instagram, on Twitter, on social media. Their image is what drives their self-worth. This will cause you to flush so much money down the toilet in the markets I can't even explain to you. Like we talked about earlier, why can't people just take a 1R loss on their trades? Why do they turn a 1R losing day into a 20R losing day? Because they're trying to make it back, because if they're down on the day, that makes them a loser. And if they're a loser, then no one would want to be with them. If I don't have $1 million in my bank account, how am I worth anything? At the exact same time on your wins, when you win, you think you're bigger and better than life. I fell into this trap a lot. Right? I think last year lulled everyone into that trap of you can just click a button, close your eyes, and 3 weeks later make a whole bunch of money. It doesn't matter what it was. Just buy anything. The markets were insane last year. Your image is tied to whether stocks only go up. Your image tied to what you do. If you're winning, you're the biggest and baddest and coolest thing out there, right? Post my Lamborghinis on YouTube. If you're losing, who would want to be with me? You've got to separate. Your self-worth has nothing to do with the results of the trade. It took me a long time to learn that, but that's why I'm able to say, you know what? I lost 2 hours today. It's okay. I'll make it back sometime. Might not be tomorrow, might be the next day. I don't know. But I get pickier now on what I do. I'm okay being down an R or 2 for a day, for a week, for a month, for a year. I'm okay with it. I don't have to be green. My image is no longer tied in with the results of the trade because I can't control the trade. How many times last year were you in a great setup where it's just perfect hammer, it's working great, and then the president would tweet something in half a second, you just lost an R? All the time last year, right? Happened all the time. And before that, it was China trade. And before that, it was whatever. And before that, there's always some catalyst that could make the market sink 3% in 5 minutes, and then you get stopped out. Does that mean your setup wasn't good? Does that mean you're a bad trader? Does that mean you should throw your trading plan out the window? No. There's just things in the market you can't control, and that's what makes it really tough for most people. So separating yourself from the results. All right. You are special because you are you. There's no one in the world like you. Your self-worth doesn't come from how much money you make in your bank account. You don't get cool points for being an amazing trader, and you don't get loser points for sucking it up and blowing up your account, right? You are you because you're special because you're you, not because of what you can do. Separate yourself from those things and untie yourself from money. It's really easy to say and very hard to do. It takes a long time. And I still work on it. Falco still works on it. Sochu still, everyone that trades, Jeremy's still working on it because it gets easier and harder, right? You have your ebbs and flows with it. Back in, I think it was January, my wife was like, Tony, you seem a little tight with money right now. And I was like, you know what? I am a little bit. I didn't even realize I was, but I am. And so what did we do? We went and gave some money away. That's what I do. Whenever I start to feel tight with money, I usually go give something away. And then if you see me in Walmart, run up to me because I'm probably giving out some gift cards or something. But that's usually my go-to. That's my favorite thing to do. Go give out some $25 or $50 gift cards. You see me on Walmart, hit me up. But it's fun because it changes people's life. That's what I want to do. It's like, look, I lose an R all the time. I don't mind losing an R and helping 5 people out, helping 10 people, whatever the case might be, right? Separate yourselves from that, accept the loss. Realize your self-worth has nothing to do with the result of the trade. And you'll trade a lot more free. If you had $5 as an R, which means the stock's going here and you got in there, your stop there. If you're going to lose $5, would you even move your stop? Would you even, well, it's like, whoa, I'm not going to lose $5. Now I'm only going to lose $2. Would you even care? Would you even look at the trade? Would you like, wow, cool, I made $5. Awesome, target hit. Right? You probably wouldn't, but that's the mindset you need to trade in. Whether you have a $5 R or a $5,000 R, it's the same mindset. I don't care if I lose. I don't need to move my stop super fast unless my rules tell me to, all right? I don't need to listen to my emotions. Why are my emotions even here? It doesn't matter. If you can be in that state of mind trading, you'll be a lot more successful. But mainly it's all about just understanding how the markets work, getting a successful plan that you've back traded, and following that plan. Putting rules in your plan that help you manage your emotions. There's a reason why my rule says I can't move my stop for 30 minutes. Why? Because that first 30 minutes is the most emotional time for me. It's when I don't know if the trade's going to work or not. So what I kept doing was, oh crap, there's a bear candle. It shouldn't get below that. And then I get wicked out and then it goes to 2 Rs and it just over and over and over again. So finally I'm like, you know what? My plan was to my stop down here, target here. Why did I all of a sudden randomly move my stop there spontaneously? Because my emotions. So what if I said for the first 30 minutes, I can't move my stop? Okay. Well, it doesn't matter how emotional I feel. I'll just get up and leave the computer and just walk away. And then look at that note on my desk of accept the loss, Tony, right? Accept it. It's okay. You've already given it away. Already plan on losing it. No need to get emotional. If you're emotional, lower that R. It's too high. Lower it down. My issue was I had to pay bills. So I had to raise my R. I had to have a high R and I wasn't ready to trade a high R. And that's what screwed me. So if you're gonna trade full time, make sure your account is in a place where it can actually supplement your income. I tried to do this on $30,000, my friends. A great trader will make 10% a month return on his entire account, which means $3,000 a month. That doesn't pay my bills. I think $5,000 paid my bills, not my groceries. It just paid my bills. So I needed minimum 50,000, and that doesn't account for any drawdowns, right? So realistically, start with $100,000 if you're going to trade full time. You don't have to. I did it on 30,000. I blew it up once, got a loan, blew that up, got another loan, and then finally figured it out and turned that into an awesome account. But it wasn't easy. And I had to do a lot. Yeah, 100K. I think that's the same way too. Yeah, 10K a month is a very comfortable living. It will pay your bills, and it'll also allow you to build money back into your account while you pay yourself to cover drawdowns. I think 100K is the minimum that you should start with. If I had to do it all over again, I would have put 100K in my account, not 30. I would have had another job to help supplement so I didn't have as much pressure on me. And I would have not been so prideful and realized that I probably wasn't ready to do it yet. Again, it was my path. It was what worked for me. It wasn't easy at all, but I did it, right? So anyone can do it. How much could you average with 50K, Jerry? Like I said, a good trader will average around 10% a month. And that's pretty good. And that's not every single month, but average. So 5K a month would be what a good experienced trader could do with it. Maybe more, maybe less. It just depends. There's months where I averaged 30, 40% return on my account in 1 month. That was January. I think that was how it was for everyone. Falco, I think you had a massive January too. January was insane. January and February, like it was 30, 40, 50% returns my entire account in 1 month. It could have been done for 2 years if I would have just stopped trading in January. I'm single and have a roommate, so even making $1,500 a month would be amazing. It's possible. With $50,000, you can make $1,500 a month. That is very possible. Oh yeah, you can do that. It's just a matter of learning the markets, learning your style and your personality, right? Do you have a full-time job? Are you able to even day trade in the morning? Do you work from home? Are you able to day trade? For me, like I've talked about before, I don't rely a whole lot on day trading to make my money. When the markets are crashing, I'm very heavy in day trading. That's where I make a lot of money. But other than that, day trading is just kind of more like play money for me. Yeah. So swing trading, you can easily make $1,500 a month with swing trading on a $50,000 account. Easily. All day. So it's just realize it's not going to be immediate. It's not going to be right away. You spend as much time on as you need to. There you go. Just know you're going to have to put the time in on it, right? It's not going to be an overnight thing. Right now, you're the worst trader you're ever going to be. I'm the worst trader I'm ever going to be. Tomorrow, I'm going to be a little bit better than I was today. I keep learning and growing and putting the time in to get better, right? So be patient with yourself. Realize it takes time. It took me 7 months-ish before I really started to figure things out and start making money. And in that time, I lost a lot of money. So if I could give you any advice, is have a small R. Have an R. Don't just paper trade, in my opinion. I like the feeling of putting actual money on it. It helps you learn how to control your emotions and what that might feel like, because that is a skill that you've got to practice just as much as learning the markets. So have a small R. Have a $50 R for the next 4 months until you can average, whatever percentage you want. It's not going to be 10% of your account, of course, with a $50 R, but proportionally, if you can do that for 3 or 4 months on end, then raise the R, and then do that for another 3 or 4 months and then raise the R. But the problem too with people, this is what people run into. So the markets have their ebbs and flows. You have months of really good prosperity where you just close your eyes and click a button and makes money. You then have a month or two of chop. You have a month, maybe even a couple of weeks of pullbacks. In this market, you have 35 minutes of pullbacks. And then you have chop down here for another month or 2 or 3, and then back to prosperity. Okay. So that's the mode of the market. That's the ebb and flow of the markets. Different time frames, not always perfect, but around that. Okay. So what happens is people have these really good months and then they go, sweet, I'm going to raise my R. And they raise their R just in time for this part of the market. And then they get crushed. And they just lost a lot more than they just made over here because they had a higher R here on this downfall, right? So then they go and they lower their R. And so I'm not ready for it. And then just in time for the good part of the markets. And then they make money and they go, okay, I'm going to raise my R. And then they raise their R just in time for the next dip. So if you raise your R, leave your R there. It's not going any lower. Leave it there. And realize that there's a good chance that after a few months of really good, there's probably going to be a month or two of really crappy. And just that's how it goes. Ride it through, because when you hold your bigger R for the good months again, you'll make that all back plus some, and then you'll be ahead. Okay. Don't fall into that trap, that never ending wash cycle of just lowering your R's for the good money making months and then raising your R for the months when the markets kill you. That sucks. So if you're going to raise it, and just realize this is the plan. This is how it goes. Right? Accept the loss. You can accept the loss with a $10,000 R. You can accept the loss with a $10 R. It's the same thing. And once your brain realizes that it doesn't matter, the process is the same. It doesn't matter, like I said, if you have a $100,000 R or if you have a $10 R, you're doing the exact same things. The chart doesn't care how much money you have on it. You still raise your stop when you get a higher low. You still take this much at 1R, you still take this much at 2R. You still take the loss and realize that you're going to lose all the time. And at the end of the year, you'll be profitable. It's the same story. Don't let the bigger number get in your head. Realize that it's the same thing. Once you get good at that, your R, as long as it's around 3% of your account, I recommend don't go much more than 3%. You can, but I recommend don't. Keep it under 3% of your account. But as long as it's below 3% and it's $5,000, go for it. Once your brain actually finally catches on of like, dude, what are you scared of? You've been profitable now for years, right? So again, that was my rant. That was that's all I've got for today, I think. Falco, are you around, my friend?
Yeah, I'm here. Just a second.
Okay, no worries. Any questions before I hop off and you guys get Robert Falco for the rest of the morning? We can go back and look at some markets. I really haven't looked too much. SPY is finally selling off like I thought it would do over here. No real volume up here. Doesn't mean it can't go lower. It's just I wouldn't be taking a short trade yet. I would probably wait for some sort of push and then volume would come in and then roll over. Qs did have the volume. Or so I thought. I thought Qs had volume up here. Maybe I was wrong. Oh, that was Apple. Never mind. That was Apple that had the volume. That's right.
Sorry about that. I was checking out on a website purchasing something.
No worries, man. No worries. I just saw you logged in, so I don't know if you were hanging out or not, but yeah, this is what I was thinking of. This type of volume at a new high and then a push away from it usually means the end of the move, usually.
Yeah.
But what do you think, man? What are your thoughts on these markets?
I mean, I still think we need a little bit more of a pullback. I mean, I don't know if that'll happen like next week when all the big, mega caps report or not.
Yeah.
Just because I feel like it's kind of already priced in, like everyone knows they're going to do well.
Yeah.
But yeah, it's tough because like we get one day of pullbacks really, and yeah, you have to buy these like tiny little dips. So I think we went down a whopping 3% from the high, and then we're right back there. So we'll see what happens. I don't think anything too crazy is gonna happen this week, but yeah, I don't know. Like today being a rest day, and then if we gap up tomorrow, we could see a new high again. But I would love for us to roll over.
Yeah, me too. I think it'd be healthier, and it's due. I mean, I think we're on our 6th bullish month in a row, so we're due. Just don't know
we
when.
have this run from us hitting the 100. We haven't hit the 100 since October. It's getting pretty long. Like if you go back, I think 2017 was the last run. I was this long without hitting the 100, let alone the 200. I mean, it's only
Yeah.
happened a few times that
Yeah.
we've gone this long. Like 2013 to 2014 was like a year. Or wait, this is actually December 2012 until December of 2014. We hadn't hit the 200, but we hit the 100 a bunch of times. So
Yeah.
I just feel like, hey, we need to at least come back to the 100, but I would love a dip to the 200 at some point.
Oh man, I would
Might not
be.
happen until October. You know, that bearish October will come around and
Yeah,
punch us right in the
exactly.
face. We'll see. I tried to short, well, I did short Crocs. I ended up getting trailed out. I think I got in a little too low. So then I ended up moving my stop and it poked me out. And
Oh,
then
okay.
I shorted Texas Instruments too. Not super aggressive, but relatively aggressively. And then I realized I'm like, wait a second, let me turn extended hours off. And I'm like, I'm in way too low.
Mm.
So I slammed my stop down. I think I literally made like 12 bucks on that. And then Crocs was an okay win. I was trading this with Blake. He's holding to 123. So we'll see. It might get there now that it's
It might
looking.
get there now. It's looking
This thing
pretty.
is insane. Like $8 billion market cap on rubber shoes.
Yeah,
They're like,
this is
how much are these
nuts.
things? Like $10? Like that is a crap load of rubber shoes they're selling.
Yeah, that is moving it. Well, and they're getting back into the fashion world. It's becoming acceptable now. So they went from selling at Savers back to Walmart. So let's do this thing. Nordstrom now.
Yeah.
Oh,
This stock, like if you zoom out on this thing, it's been amazing.
dude, I know. I was checking out the weekly on this. I'm like,
Yeah.
you've got to be kidding me.
Mm-hmm.
I had no idea. If someone would have said, just what do you think Crocs looks like on a chart? I'd be like, it looks like this, like sideways for the last like 20 years.
Yeah.
No, rampage. Absolute crushing it. They're like, you know what? COVID is going to be good for us rubber shoes. Nurses. Someone did say hospital, something or other. I don't know. They did something with
Yeah, and a lot of
hospitals.
people working from home, and like I know a lot of people that like to go camping, like they use these camp shoes, and a lot more people are camping now. So I mean, I get it, but dang,
Dang. Well, especially this all time high gap.
yeah,
Well, this was a huge gap, by the way. This was like what, 13%,
yeah,
give or take? That's big. That's big. We wanted this. We were eyeing this all morning long. I said, I just want some consolidation, and we got it.
yeah. That's right where I shorted it at
Oh,
130.45.
I stopped watching as soon as we broke down here and I went and did on some rant, but this was a missed opportunity. This is exactly what I asked it to do. I wrote a little note up here. Fade, look for a bull move. And it's like, this was it. That's all I needed.
Yeah, when it
Stop
made this
and
new
trade.
low, I put my stop like right there, and then this little wick got me.
Oh, gotcha. Yeah.
But I did get a partial off right around it was 126.60 or something.
Hmm.
6. So that was a little win.
There you
Nothing
go.
crazy.
This might have been the easiest fade all year, honestly.
Well, I don't know. That Beyond Meat one,
That's true.
gap up on Beyond Meat was like that, and then Virgin Galactic with Branson going to space. I
Oh
felt
yeah,
like
Branson. I did not know that was this weekend, and as soon as I saw it on Saturday or Sunday, I was like, I should have bought puts, and they would have paid out so good. Oh man, that was the first thing that came to my mind. It was I am not following this, so I didn't know what was going on, but dang.
yeah, and some poor soul bought like first thing. I think it was what pre-market opens at 4 a.m. Eastern, up at like 59.99.
Oh
Someone
my
bought like it
gosh.
went all the way up to pre-market, and then it just got crushed all the way down to like the high 30s.
Oh, they're like it's successful. Time to buy this thing, and it's
Exactly, exactly.
man, wasted.
So those were pretty easy fades too, but yeah,
Those were pretty
I
easy
had I
fades.
had
That
to
is
at
true.
least try Crocs today.
Man, yeah, we were dying. We were just trying to get that. And I honestly just forgot to go back to it. That was my fault. But did you see this Dairy Queen fade? It's Docky, but Dairy Queen, what we've been calling it all day.
I saw that it had a big gap up. Is this a Chinese company? No.
I don't know. It's an energy. I
Yeah,
don't know
yeah,
anything
this
about
thing
this
just
company.
immediately even know. Let's see. Was there I don't even think there was really an opportunity to get in this.
There wasn't. No, we looked at this. I wanted this to have a little bit of consolidation. For me personally on fades, I love for the bulls to get trapped right out the morning. That's what I look for.
Yeah,
But
there was no buying like that.
nothing. It fell off, and there wasn't even an attempt to bounce off of the high of yesterday. It just kept going. I mean, absolute dumpster fire on this thing.
Yeah, I mean, unless you bought like a few shares pre-market just to see what would happen, or sorry, short sold a few shares pre-market just to see if it would flush. Otherwise, like, there's no way you're getting in that trade.
No way. There's nothing.
Too fast.
I mean, yeah, even a 1 minute is just straight bears. Just straight bear candles, waiting for an entry.
Yeah, because even that bull candle 4 minutes in, like at that point, you're so extended off the moving averages, like you're not going to short that breakdown.
You're like, what is this? What are you at right here on the RSI?
Yeah,
14.
Like, yeah, super low.
There's no way.
So,
no way. Yeah, there's nothing. But those are our two fades for the day we looked at, and not one of them gave us what we wanted. Although Crocs did, I wasn't looking at it. I was too busy putting everyone to sleep. So that's it, man. Well, we didn't take anything, but there will be setups out there, I imagine, especially if the markets start to accelerate some. If anything, come back to the 10. I don't think we'll do that today, but it's got a chance to. We'll see. Probably just rest and hang out. I was hoping.
Yeah, I feel like we need a rest after the last couple days.
Yeah, there's some big moves. So fill the gap. And honestly, I thought yesterday we would trap and rest yesterday, and we just kept cranking. So who knows, man? Wild times. We'll see how it plays out, but I don't trust it. Like you said, I don't trust the bounce yet. I think at least double bottom and then think about it. But maybe I'm wrong.
We bounced so hard, so fast that, yeah, I don't know. We'll see.
We'll see.
I mean, I still bought the dip. I didn't buy a lot of stuff, but I did buy a few things.
Yeah, I sold puts on the dip against my long puts, and that paid out really well. But I should have. I was really thinking about buying calls off the field because, I mean, it's worked like 20 times in a row. I mean, come on. So why not? And I didn't do it. I said, I'll just sell it. It's fine. And I should have, because those would have been absolutely cranking in profits right now. Shoulda, coulda, woulda, man. But well, cool, guys. I'm out of here. Thanks for hanging out. Have fun with Falco. And you guys can always reach me, Tony, at reallifetrading.com. Check us out at Real Life Trading. Sign up, trade with us, have some more fun. We'll see you guys later. Bye, guys.
All right, later, Tony. Let's get the chat pane up. How it always closes it. All right. So good morning, good afternoon, wherever you are at in the world. Some good evening, I guess, as well. It's a SPY right now, small gap up, and just looks like we're resting for the day. We just had such a run the last couple days that I feel like the market needs to rest a little bit. The Qs is still bullish right now, which is really being carried, I think, by like, let's see, Amazon is up 1%. Yeah, Amazon. I think this is the beginning of a new public participation phase. I think this was your distribution, my annotations. I think this is your distribution phase, and I think we're going to have a public participation phase. That could all be slaughtered by earnings. We'll see. But I added shares, obviously, on this pullback, where that green line is. And I added shares yesterday as well, this inside candle right there.